All right.
I'm always dancing when the intro comes. Good morning, everybody.
It's such a good intro. Yeah.
It is, really.
Such a good intro.
Just hits a vibe and gets me ready for trading action here. How's everybody doing?
Well, I'm doing good, and I hope everyone watching is doing good as well. I told everyone your little trip to the French Riviera yesterday, and I don't know.
the northern French Riviera, that's actually closer to you where you live already.
Yeah.
Yeah.
All right.
So on a little trip here. So coming to you live from this cozy hotel room. And let's see. Maybe it will benefit my trading today. Maybe it won't. I actually opened just a live trade already on gold.
Wow. What are you trading today?
Of course, gold, as always, no?
Oh, wow. Well, okay.
Everybody
wants to
trade. Let's to
it.
So
right into action. Let's go.
I went long here. Oh, God, I have to get used to the setup here. Because what we saw was quite a good breakout this morning over the 200 EMA, the 50 and 21 EMA kept pulling up as well. We saw one bounce here of a 21 EMA, second bounce now of a 50 EMA. So there's a good chance we're going to see continuation, in my opinion, to higher levels, maybe attack 3030, which has been a little bit difficult lately for gold, as it seems in the last days. Stop loss, I'm going to put down here at 3015 to give it a little bit of leeway should we really first choose to return here to the 200 EMA. So I need to put on my stop loss. I forgot that. Later I get a warning here because I'm running without a stop loss. 3015. And Jonatan was so kind to help me install the MetaTrader just now because somehow it didn't work for me. But now I'm all set up. But maybe you know that. You're like, see this amazing trade or what you think is an amazing trade, and then somehow you forgot to install something because you are in a different setup than you usually are. Have you traded anything this morning?
Not this morning. I just got to my desk. I've been been working out and doing some meditation. I went on a walk. I felt this morning. I felt like it was not in a good flow, you know. So I felt, I need to get into a good flow. So I did some light workout and some meditation, and went on a walk and did some admin stuff. And because I feel like sometimes I'm trading. I've already traded like 1 or 2 hours before the session, and I kind of get burned out quickly, you know.
That's the thing. If you're like really on the low time frames, like the 2-minute chart I'm looking at here, parallel, I'm looking at 6 different cryptocurrency 2-minute charts that I'm trading also with my community today, and it burns you out rather quickly. It's actually what I like to do. I think we talked about this before on last week's stream. I sometimes like to actually purposely procrastinate a little bit while trading, like look at other stuff, look at a YouTube video or something, so I don't get too focused on the charts, because I tend to interpret too much into what's currently going on the charts if I do that. But for now, it looks like it's holding up there quite nicely. We saw a bounce off, so let's see if we can resume the trend in gold. Anyway, always nice, because so often I'm searching for the good trade setup here for the live stream, to see it right here in the beginning, something where I say, hey, this is really a setup I like to trade if I'm trading with a trend.
I've started looking into different sessions, and especially the opening of the different sessions, and I've been backtesting an idea on NASDAQ on the New York Open, basically trading in the direction of the first 15-minute candle, and it shows it shows edge, although small. But I'm thinking, because there's no commission trading with the 5ers, I might actually be able to make some money out of that. But now I'm looking at the London Open. I'm trying to figure out if there's any pattern on gold throughout the in the London Open, and can't really say I find anything interesting. But the London Open, it says on my screen that the London Open is 9:30, but isn't it 9?
It should be at 9, no? I don't.
Should be 9.
Like the metals exchange were opening at 9:30. It should be at 9, in my opinion.
Exactly, it should be at 9. Huh, that's weird. I gotta make sure that I do have the right sessions on here.
See.
By the way, we have just a quick comment here. I'm gonna take care of this today, so I'm not sure why it's taking so long, but I've just sent a message right now when seeing this. Hopefully, this will be taken care of today. If not, I will just reach out directly to Saul, and we will take care of that. Usually, it doesn't take more than a day, but the person responsible for this is on vacation, so I go a little bit slower. Okay, so you are long gold. Okay, so let's see.
I'm along gold at the moment. What do we have here? Something popping up in Bitcoin, but I still need to wait for Confluence there. Never mind. Yeah, take over. Share your opinion with me on gold. Please.
Yeah, so let me show you something.
Wrong.
let me. I'm gonna go over here and I'm gonna look at. Well, just look at this. This is the London Open, right? And
yeah.
The idea here is to trade with the momentum that is, trade with the momentum and on the open. And we can go lower even into the 1 minute. And you obviously see here that you have downtrend, you get that London Open, and then you have bullish momentum. And the bullish momentum has now been in play for many, many hours. I do think that there is a possibility here of finding an edge in trading with the momentum of the London Open. Same thing here. You have the London Open right here, bullish momentum. And you're able to get a 1 or 2 R of that one. Can go back to this one. Now here you see that you have the first. Now this is a range, right? Now obviously this would have been most likely not a profitable trade because it just keeps ranging. But then again, it's at a high time frame support. We can go back to the first one. Yeah, so I'm gonna see if we can. I'm gonna see if I can find any edge in trading based on the volatility, based on the London Open.
That would be quite interesting to see that. If there's something. I mean, it's we normally see these moves during the London Open. I mean, it can be to the downside, obviously, as well. Same probably later for the New York Open, because this is like when the institutional players out there, I'm not even saying something like hedge funds, but people who maybe physically need to settle business in gold. If you're a mining company, something, they usually will do that in the early morning. So you have like the guy taking care of spot gold, for example, at HSBC coming into his office. His clients call him and when he needs to place these orders, and this is why we see those moves usually. But of course, it would be interesting then to see, does this set the tone for the remainder of the session?
Right. Yeah. Okay, I'm gonna stop looking at that. I'm gonna do some back testing when I have the time to do so. Okay, so looking at gold here, we have what I see now is we have a range here, so not much for me to trade at this time. We have on the 1 minute here, but okay, so let's do some top-down analysis. We first look at let's go in here and remove the news. Okay, so top-down analysis, we have a retest on a daily. So daily is bullish. 4 hour is neutral, I would say. Looks like we might get a push or upside. Well, I guess 4 hour has to be bearish, but it's a secondary trend. So the daily trend here definitely has the precedence, I guess that's called. And then on a 4 hour, we do see, could potentially see a push or upside to the 3,024. 25 area, but I do feel like the structure on the 4 hour is bearish. The structure on the 1 hour is neutral. On the 15 minute, we have a bullish trend. 5 minute neutral, and then on the 1 minute is neutral. So we do have the high time frames telling us that we have a uptrend, which if we break these highs, we can trade the breakout. And that would probably look something like this, where we go long here and trade it up to that level. That level would be TP. Okay, so that's going to be the trade for me today. I'm going to be trading a breakout on gold here. So now that I've done the analysis on TradingView, it's time to, well, first, okay, so that's the long idea. Now we also have to make up our minds for a short idea, because what if we break to the downside here? Then we have a very good area right here. So we might take the trade, break it to the upside, or a break to the downside. So that's the two ideas that I'm thinking about now. We have a range. And now that I've done the analysis on TradingView, it's time to move over to MetaTrader and execute the trade if it happens. So I will be preparing the take profit and the stop loss. So I'm going to be putting in the take profit and the stop loss from TradingView. And then I will simply just execute. I'm going to lower that a little bit. And then I will simply just execute at market whenever
the 5K accounts.
Yeah. Okay. Long story short, what I did was, and I'm not wearing the clown suit today because
I cannot have a hard time seeing. Is that 9,000?
9,235. So what happened was, what happened was, Victor, my dear friend Victor, and Pedro, they both said you should have hotkeys. So I'm like, okay, let's do hotkeys. So I set up a hotkey, and apparently I set it up on the wrong button. I set it up on the button where I'm locking the key, where I'm locking the screens and everything. So I locked my computer, then I walked away to have a shower. I got back, and I see that I'm in a big position in a loss, and I immediately closed that one, and I was like $5 away from the daily loss limit. So yeah, but it is what it is. And now what I do is I always have.
But how come? I mean, this account is almost doubled now, no?
No,
because last time we were talking.
I lost that one. That one I lost.
Oh, okay. So this is a new one. Okay.
Oh,
yeah, I mean, exactly. That one was like your I want to go a little bit crazy type of account, no?
Yeah.
I really thought that
one
like,
lost. Okay, so look that we got
double this one within a week.
Okay, we got good momentum coming up here. I'm pressing trade, and you can't see the screen. You can't see the window pop up. Okay, this is the breakout. I'm just gonna buy here. I feel like this is a breakout. Let's go. Buy. I'm in.
Go for it.
Okay, that's a breakout. Let's see what we get. What's the risk? How much did the risk on this one? 0.12? What is that? What type of position is that? It's going to be 1%. Let's go. We go long. We are long. We're strong. We're going to hit that TP. We are going to have a winning trade. First trade of the day. It's a winning trade. Let's go.
My position.
The money-making machine.
So
on the valuation account. No money. But let's just pretend. Let's pretend we're making money. How are my swing trading positions looking? Let's see. Yeah, that one hit stop loss. But the other ones, probably going to be adding to that one. Is doing a shake up. Okay, Euro AUD looks to be breaking down.
I did a far too small position. I'm just seeing. It's just traded 0.1 lots.
0.1. Wow. Okay. Well, I have one position that is 0.03.
Yeah, but I'm doing it on the 100K account. So.
That's right.
But anyway,
that's right.
You know, better this than accidentally buying 10 lots. Good. So let's see what we could potentially do now if a breakout. I'm just quickly going to at my MetaTrader screen here, go through the annoying process of having to stop sharing and then share again. Here we go.
Yeah, it is. You have to remove mine and then add yourself. It's
at meter stage. So as you can see, like far too low my position size, because normally when I do these trades, I kind of have like a stop loss. The first stop loss like 50 points away. So that's why I try to risk like 0.5% per trade. which would be $500 here, obviously. But I didn't adjust for this because my stop loss here is much, much closer. But what I want to do now, I still want to make sure that I don't lose on this position anymore. So I want to put my stop loss now to 3,000. Let's put it to 3,021 in case the breakout is not where it should be. Well, then we're going to get stopped out here rather quickly again. I have to remove myself again and have to switch to my other screen of the 10 billion screens I have open here at the same time, which would be this one. Yes.
Oh, wow.
So take profit for this trade for me is a little bit like in the flow, I don't have like a certain take profit.
I'm gonna add your screen again, man. StreamYard is I don't know why they have that function. It's like
my screen is added, no?
No, I just added it.
Oh, you added it. Thank you, man.
Yep.
I really have to write to the support. It's like so annoying that you need to do 2 mouse clicks when just 1 mouse click would be totally sufficient to get to the same result. So I was just saying, so what I want to see now, I don't have like a fixed stop loss here. What I like to do now is I want to wait for signals actually from my 2 indicators, which would be ideally, let's zoom out a little bit here. Here we had a bottom signal, something like this a while ago, a top signal, for example, or a sell signal that we also saw earlier. I can see already that we are entering terrain here where, the market is heating up a little bit too much. So could be that we see a top, could still be that it's going to continue for a while, like it did this morning here. We also went up by another $3 to $4 before it flattened out, and we saw the reversal here to the moving averages. So we'll wait and see if I get a top signal here, a sell signal, that I'm just going to close my position. And, then it's nice to have that first trade already in for the morning and start the session on a good vibe, so to say. The only thing that annoys me is that I risked so little. But anyway, that was because I was so eager to get into this trade and I couldn't install the MetaTrader.
Yeah. Yeah, and you're in a new place and you're on a laptop. It's things like this is rather enter a small position than a too big.
And
right?
it's hotel Wi-Fi, so you never know really.
Okay, so we got the breakout here on gold. Let's see if we're coming back down. I can switch over quickly to my MetaTrader here. You see, my entries are up here, and I did get into this trade a little bit late, but there was a lot of momentum, on this breakout. So I did get in a little bit late, but it's so far looking good. We have stop loss in a good area. We have a level that we can easily retest right here. So yeah, I like what we got right here, and then we have a good level to the upside as well. So yeah, I like it.
Where did you put your stop on this one?
I put my stop at 3,019.81.
Yeah, because I basically secured my position here with break-even stop loss. Can be, of course, that I get stopped out now and then we see the trend continuing higher. But anyway, it doesn't really matter on this trade. I just would actually on the pullback to the moving averages maybe re-enter the trade then. So let's see.
The quality should be good. We're streaming in 1080p, so it should be good quality. Perhaps it's on your end, and of course, if you're watching on a phone, then it's going to be a bit difficult to see everything clearly. Okay, let's do a poll. Will my trade hit stop loss or TP? Let's see. That's going to be interesting. Most of the time, the audience is actually right. So let's see what we get this time.
By the way, it can also be because I just saw you wrote on Twitter, maybe like, I'm not sure if Twitter has like resolution restrictions there. On YouTube, for sure not, but it might be the case. Oh my God, like plenty of crypto signals popping in here this morning. What do we have here? Okay.
Yeah, Bitcoin had a good break and retest of that level, so it looks like we're potentially entering the previous range here on Bitcoin. All right, let's do a poll. Okay, guys, I'm gonna be opening up a poll here. Let's go to the poll section, and no, not the poll section, the comment section to see if what you guys think. Will my trade, the gold trade, hit TP or stop loss? You have a couple of minutes to vote. Let's go. Kingmaker is asking, what about gold? Well, that's what we're trading today. That's what you got on the screen. Gold is what we're trading. We have a breakout right here. You see I'm long in the breakout. I got my stops below the low of the Henry says stop loss, of course. All right. That's a weird answer. Absolutely brutal. But that's a good looking break and retest that we have right here.
That looks really, really good. I was just about to say,
yeah.
I like what I see there.
Yeah. Okay, we got 63% saying TP will hit, and I'm with you. I'm with 67%. Yep, 68%. Look at that. You know, the funny thing here is, you know, the more bullish candles we're getting, the percentage will go up for the TP. And as soon as we have bearish candles, we're going to see that drop. This is going to be interesting. Only 30%. Henry, you're definitely in a minority here. So, yeah.
But which is a good thing normally when trading, no?
Yeah. So, you know, 60. The thing is, like, 70% think that my TP will be hit. But then, like, maybe 70% of those 70% are not profitable traders. So I don't know. Maybe the 30% thinking that my stop loss will be hit is, you know, those contrarian traders. But this is, you know, the market structure here is just it's too good to ignore. Like it's yeah. Okay, so if we break that high, we'll move stops up.
This is like.
Wait a minute. This comment right here. More sellers right now, so I think it's going to go higher. No, that's not the way it works. That's not the way it works. If you have more sellers, price goes down. Well, okay, it's not really about more sellers. You can have 10 sellers and one buyer comes along with more volume, but
it's also, you cannot have more sellers than buyers, guys. It's impossible, because the last price is always the equilibrium where supply and demand meet each other. So you have the same amount of sellers than at buyers as the current price.
Exactly. It's like if I enter a trade, then someone has to take the other side of that trade.
Exactly. It's just about, okay, the sellers are accepting lower prices, because they want to get out, or the buyers are only willing to buy for lower prices than price. And we have a really nice breakout now. I hope we go over the last higher high now. Then this is going to be a very nice position.
And when people say you have more sellers, it's just about the sellers having more conviction than the buyers, you know. My TP for both William and Rob asking, my TP is at 3024.7. How can you add that position size here? You go to Google and you Google position size calculator for MT5, and then we'll get up a website that is called earnforex.com, and on there you will get the position size calculator. We should get paid for that. Like, we are advertising this position size calculator so much that I feel like we should be paid.
We should be paid for sharing a free tool.
Oh yeah, you're right. It's actually free, yeah.
But yeah, it's traffic for their website, so you could argue like this.
You do have a point, yeah. All right, are we going to be hitting TP? What's the number? 66% says yes. 66% says yes.
Oh,
okay, Jonathan, whenever I will be getting my first payout and team will approach, you're trying to pull it up and I remove it. Oh, man. Yeah, definitely, man. Definitely. Just let them know. If you want to do an interview, like as soon as you get your first payout, just send an email to you can send an email to tradingroom@the5ers.com or jonathan.r@the5ers.com, and I would love to do an interview with you. Or you want to get on the live trading room with us, and you want to be trading live, you want to do that interview live. That's lots of possibilities here. So if you're interested, just let me know, and we will set it up. You send an email to tradingroom@the5ers.com. You can also see the email right now at the bottom. If you draw a trend line above on the 4 hour and 1 hour, I will take the trade after the break to be on the safe side. Okay, let's go to the 4 hour on TradingView. Let's check it out. Check out your idea here. Okay, we go to the 4 hour. Where's the trend line? Is this the trend line that he speaks of? I believe that it might be. Let's connect that one, and we connect that one. Okay, 1 hour is the trend line on the one. Isn't it above the level though? Hasn't it broken already? I don't know. I think you're absolutely onto something here. We're definitely going long into a resistance area. I don't like this. I'm gonna close the trade. Okay, closing the trade. There we go. Is it a winning trade? Probably not with this, with the commissions. But now I don't like what I'm seeing here. I didn't even share the screen. Sorry about that. But let's go over to MetaTrader. I do not like what I'm seeing here. I do not like what I'm seeing here. So I just closed the trade. Close the trade for a small $13 win right here. Small win, but there's no, I don't like this momentum. It's weak momentum. And if you go to the 4 hour, you see that what level are we hitting right now? Well, we're hitting a level that most likely we're going to see a rejection at this level today. So let's remove that level, and we're going to remove that level. Now, trading on the lower time frames, it's all about executing on your ideas and taking quick decisions, and that's what I try to do. That's the level that we're going long into. We're basically buying that level. Now, if you go back to the 1 minute, what I wanted to see was a strong breakout. Okay, strong breakout. We had a strong breakout right here, retested the level, but this is weak price action, because right now it looks like the breakout is slowing down. We have, as you can see here on the 1 minute, lots of wicks to the downside, lots of wicks to the upside. I see a lot of indecision right here. And actually, this does not look like a higher high. That's actually an equal high. So what I'm thinking here is that the best course of action here is to take the money while the idea is, while there's still money. But I do feel like we're seeing signs here of a slowing down of that breakout, and we're reaching high time frame resistance. So yeah, that's it for me. Let's see if we can add some commissions here. So the commissions was minus 1.4. So I actually did make money on this trade. I made a tiny amount of money, but it's better than staying in a trade where you've lost conviction. And that's exactly what I did here on the lower time frames. I felt like I've lost conviction. Now, you might look at this and you say, that's a bad exit, but I say no. It's a good exit.
I don't think it's a bad exit. I'm staying in my trade because I was lucky here to get a better entry into the trade than you, an earlier entry. So I put my stop loss now to break even, and let's see. It's free money by this point. I cannot lose anything anymore in that trade.
Dirk, can I ask you a question? What does this mean?
You don't believe equal highs are engineered liquidity to be run? You mean like somebody pushes it up because it's like stop hunting, or? But I also
okay, so
don't understand.
you've been trading for 26 years, and you've been trading options, and you've been head of a family fund, and I've been trading for 8 years, and I would say I have a pretty good understanding of technical analysis. And then I get a question like this, and I'm like, do people think that institutions are out there to really try to engineer price action on gold? I mean,
it
it's
would
not
be
about
expensive
that.
to do, no? It would be very
It's not
expensive
about that.
because it's such a liquid asset.
It's about supply and demand, and it's about price reaching a level where either supply outtakes demand or vice versa. And that is shown in the chart with equal highs, because that's just the nature of supply and demand. It's not about engineering price action. Institutions that are selling and buying gold, they have specific levels where they want to be buying and selling gold. In the stock market, for example, they look at the VWAP. Like, okay, so I want to be buying this stock. Where can I buy the stock? Well, if you buy close to the VWAP, then you will know that you can get a fairly good amount of stocks without moving the price too much. So I feel like this idea of the market being manipulated and price structures being created to run stops and take out liquidity, I think would be much easier for people to use to get rid of that idea and instead just trade what price is doing right now. As a technical analyst, we don't care about what price. I mean, we do care about what price did in the past, but we care about what price is doing right now, not what price is doing in the future. We care about what price is doing right now at this very moment, and we trade what we see. And right now, what we're seeing on gold is, a pusher upside, taking out the highs, an uptrend. And I am not seeing any manipulation or engineering of price actions.
So what you see, my 2 cents on this, because I know how the investment banks and the forex teams, you used to have always like one person in charge or a team in charge, like taking care of everything gold, spot trades, outright trades, hedging trades, and so on and so forth. That comes in from clients. And what if you're an investment bank, you cannot run a model where that basically is targeting the loss of your client. When you're a broker, like the typical, vanilla forex broker, one of the millions of forex broker that we see, like offshore license somewhere, Seychelles or Mauritius or something like this, where regulation is not very heavy, they will do something like this, but they will not manipulate the price itself. What they will do is at odd hours, they will widen the spreads to force you out of your position or to take out your stop. This is because their business model is the so-called B-book business model. You can have an A book, you can have a B book. A B book means your order with that broker is not actually reflected in the market itself, because your broker takes the opposite position. So they win when you lose, which is a heavy conflict of interest. But it's so profitable for many brokers out there, because we all know that 97% of new beginner traders lose money, short, mid, and long term. So it's very profitable to do this. This is why I always emphasize, look for a broker, contact the broker if they put you on an A book or straight through processing. This is usually the case when you see that you pay like execution fees on your trades. Like with the The5ers, for example, you have this commission on every trade you need to pay. This is what the broker earns on them. And so if like in the case of forex brokers, not all forex brokers, please don't get me wrong, but many forex brokers, especially the new ones or the ones that have like weird offshore licenses, be careful, because they will take the opposite of your position. And I've seen that many times, that suddenly you have somebody winning big and then they refuse to pay out. And we see a little bit, the price is really struggling a bit to the upside. I think you're right, Jonatan.
So here's the question. We don't really have A book and B book, but if you're profitable and you're making money, then we want to make sure that we're making money on you. We would never, trade reverse on someone who's not profitable, because if you're not profitable, you're going to lose that account anyway, and you're not going to be available to do anything like that. That's the idea of this, right? If you're not long-term profitable, you're going to lose the account. But if you are profitable, then you will get connected to the pool of money on the back end, and be trading the The5ers fund, basically. Everyone who's trading with us and is profitable is in some way connected to the real fund in the back end, depending on your risk. That's also why if we're getting like an email with a risk limit saying like we think that you're an aggressive trader, that's because we see potential and we want you to be connected to the back end. We want you to be trading for real. And if you're too aggressive, that's not going to work. So we try to make sure that everyone is trading in a way where it's set up to be able to be long-term profitable.
Exactly. So as I just said, I'm still in that position, and I think really it showcases, in my opinion, how simple it sometimes can be to trade with a trend. When you see a strong breakout, could have also been to the downside when we would have taken the opposite trade of this, and you see those pullbacks. And for me, these are the 21 EMA. This is the 50 EMA. These personally work for me. You probably could put other EMAs or weighted moving averages or simple moving averages. It's all about finding a spot where price potentially could reverse and continue into the trend direction. And I like to trade this way because it always gives you a nice risk reward ratio, because you have all the upside potentials or downside potentials, of course, if you're in a short trade, and you have a stop loss that is pretty close to where the price actually is. So you have a fixed stop, but your potential to the upside can be also, if really the trend continues and you just stay in this trade and occasionally adjust the stop loss, for example, could be limitless. Like if this trend continues the whole day and from my indicators, I don't get any signals like, hey, this might be a local top now, or this should be an absolute top, I might just stay in this trade, and then surf a wave. And if we end up later at 3,050 or something, well, then it's all I need to do for the whole day. This is all it takes, just this one trade.
Yeah. Okay. So it looks like I did exit. I had a bad exit on that trade. We can go over to, I think TradingView is so much cleaner. So I'm going to go over to TradingView and show the idea that I had. So this was the general idea, right? And I did close the position here. So that was almost a 1 hour trade. And now you see prices pushing up, and that TP would most likely have been hitter. But that's okay. Making small amount of money is better than staying in a position where you feel like you don't have the conviction. Now, the question is, will we be able to see this move run? I think now it's, at least for me, the trade is done. I made my decision on this trade, and these highs. Tim is saying that price is above those equal highs. Yes, you are correct. It's called a breakout, and that's the way the market moves. We create higher highs and higher lows, and sometimes you break above the equal highs. Does not mean that the market is engineered to take out liquidity. This basically means that the buyers have stronger conviction than the sellers. And why are you creating higher highs and higher lows? That's because that's how the market moves. Even untradeable markets will move in trends. Even random price action will exhibit trending conditions. We don't really know why the market trends. There's no, there's actually no scientific research done on why we do see higher highs and higher lows in markets, and even untradeable markets. Even things like, it's just the way the world works. If you're on a diet and you track your weight, you're gonna have, hopefully it's gonna be a downtrend, but you're going to see lower highs and lower lows. Even with that, things move.
I hope my weight also is in a downtrend, yeah. But somehow I still need to see that break of structure.
Yeah, I'm in a range at hopefully resistance. Yeah, I mean, that doesn't matter. Well, like if you're trading ICT and it works for you, that's all. All the best to you, and I'm happy that it works for you. If you're probably doing that, I'm super happy for you, and I don't care if you're trading ICT or TCB 25,000, edition 2. But what I do feel is rather problematic in the trading space is that we're trying to create things that are not not needed, and it's just not there. It's like, oh, gold goes down, takes out, it's all liquidity. Institutions are hunting your stop loss. Like, who cares? Just trade whatever the market is doing. Trade the pattern that you find, and do not care about the institution. If you want to see institutions trading, if you want to see institutional trading, you go to your USD, okay?
Yeah.
You go to your USD and you go to the daily, and you pull on the volume. Okay, pull on the volume. Now this is tick volume, so it's not gonna go to the futures market, but you pull on volume. Okay, what are we seeing here? We are seeing interest in the accumulation of Euro USD and the breakout. Now this to us tells us that this is a accumulation range, and institutions are most likely buying your USD at these levels with an increase in volume. What does this mean? This means that there's an increased interest in this accumulation range, and most likely what we're seeing here is the clues of what the institutions are doing. It's only possible to know what institutions are doing by looking at volume and open interest. So you can look at open interest and you can look at volume. That's the only way to do it. You can't do it in any other way. That's the only way to do it. You got price and you got volume. That's the two things we have as market technician. That's all we have: price and volume. Every indicator that you see is based on price and or volume, and then you can make up new things, but it's still going to be based on things. Same thing. I don't remember you. I have no idea who you are. But yeah, well, actually, I do. I kind of remember that baby, because my son watches that show, and I do remember you. I'm not sure if it's a good memory, but yeah, hopefully it's a good memory.
Show called again? Baby Boss or something? No?
Baby Boss. It's me, FXDP. Oh, maybe I banned you. Did I ban you? Let me know. Maybe, I don't know. Maybe I have a very good memory of you or a very bad memory. I don't know. But welcome to the show. Be nice. Vinay says, can you explain your strategy?
We double clicked again, man. So let me maybe. I mean, this is basically what we talk about here all the time, all day on the stream. And if you want to get a hang of our strategies, and also sometimes how they change over time, how they adapt to the new realities, you have to watch more often to see what we are doing here and to get a hang of it. I don't think it can be explained really in 5 simple sentences, because it's always depending also on the market structure.
I thought about this a lot, because as someone with someone, as I would guess, I don't like being, I don't like the word influencer, but I guess I kind of am some type of trading influencer, and I thought about, a lot about, creating content and creating, videos on YouTube about different systems and strategies to use and all that. And, videos like that do get good views. You can make a video that says like, oh, this strategy, like you need to watch this strategy, like this is a good strategy and all of that, and it gets good views because people are looking for that. But I've stopped doing that, because it is not about the individual strategy. It's not like, if you want to make it in trading, it's not about going onto YouTube and finding a strategy. Okay, I think that is a very like a serious misconception that people have in trading, that all you need is to find a strategy. Okay. And you don't need to find a strategy. You need to create a strategy. You need to find a process for creating a strategy. Okay. So when I'm thinking about creating some content, probably here, do it live as well in live trading room, like setting up a process for how you create a system. Because trust me, Dirk did not buy his system. I did not buy my system. No one that you've ever seen on this live stream have bought a trading system or is trading exactly like someone else. We have all done the work. We have all done the back testing. We have looked at the numbers. We have crunched the numbers and looked at the best combinations of different price action structures and indicators. And we have a system for us and for ourselves. And that is truly unique to the way we're trading. And that's what you need to do. You need to ask yourself, how can we create a system? Simple as that. And you know what? Creating a system is not difficult. It just takes time.
Yeah, I mean, you can always take somebody as inspiration. Like, for example, I learned, despite me doing this for a very long time already, I learned a lot from watching how Jonatan is approaching the market. I learn a lot from what Victor, for example, is doing with his quasis and his daily analysis. I learned a lot also from Alex on the lower time frame. This idea with trading with a trend with the use of the moving averages. This is something actually that Alex showed me a while ago, where I thought like, hey, this is actually good. I like what I see there. I want to adapt this a little bit to my personal style, to what I look in price action, and to adapt this with the technical framework that I use for low time frame trading. And then I made it myself, because by the end of the day, what are you going? Let's say you are somebody following Jonatan and you copy all of his trades he's doing here, or when you see him writing on Twitter or on a YouTube video or whatever. What are you going to do if he doesn't do that anymore suddenly? Then you are back to square one. Don't make yourself dependent, or so much dependent on somebody else, because if that guru vanishes and doesn't produce content anymore, well, then it's all for nothing. Then you're not smarter than when you were like 3 or 5 years ago when you started following that person. That being said, still, I think it's a good idea. I like to watch other traders, other successful traders, that is, of course, so not the average influencer. I'm really talking about people that go on the air, and do live trading and really show what they are doing there, and not do something like, oh, yesterday I did this and that. Well, did you really? How can you prove that to us? You could have all been engineered, And those people I take seriously, and from those people I'm willing to learn. And this is this is why I like being a trader, why I like being an investor, because there is no boundary on learning. There's like no limit that you will eventually reach where you can say, I've learned everything there is to learn about this. Like when you, I don't know, study physics. Well, not really. Also like classical physics, not talking about quantum mechanics or something like this. And here it's an always evolving process. The markets are constantly changing. Things that worked for me 20 years ago are not working anymore. Some things that worked 20 years ago are still working for me. And but still, you need to always adjust your process and basically reinvent yourself. Just like I did, something like I'm doing here, trading gold I'm trading on a 2-minute time frame. That's something I've never done before. When we started this, it was like my nightmare. God, people are going to request that I live trade gold, because usually I always lose when I trade gold. And now I'm slowly getting the hang of it. I know you would try, because you like that momentum now. Yeah.
Yeah. No, it looks like a
but
top.
It's okay. My entry was 3020.5-ish. My stop loss is 3021. So, que sera, sera, so to say.
Yeah. Okay. So I don't have the best entry, but I think we're gonna come down and perhaps test these lows right here. I think we're gonna take out everyone who is long. Everyone probably has their stop loss right here. We're gonna be hunting.
It's being bought up already again. I think you're wrong.
We're gonna be hunting that liquidity.
And you mean now, the engineered liquidity?
Look at me hunting stop losses. I am. What is it? What is it called? Enigma. I'm the Enigma here. Okay, so there we go. There we go. We're gonna take out all the lows. The institutional orders are waiting below this level. Gonna take out the stop losses. Gonna hit my TP down here. Let's go. Let's go. Oh, I can't believe I'm shorting the strongest asset in the world right now.
You know what? I didn't share that with you. I had a trade last week on gold, which came up to, I think, $0.05 of my take profit, and then it reversed. And I didn't lose on the trade because I had my stop loss at break even. But like the typical thing, that you sometimes experience as a beginner trader it goes to my stop loss, to my take profit, but it reverses just a teeny tiny bit before that. Now, normally I would have manually closed it, but at that day, I was in other meetings, and so later at night I saw it was like, oh man, this still happens, yeah.
Yeah.
Oh no,
Okay.
it's coming down.
Okay, guys. So are you guys? Hopefully, you're not coming to this live stream to copy what I'm doing right here, because this is a low conviction trade. Low conviction trade. It's 0.5% risk instead of 1% risk, and the idea would just be to.
Sorry,
right,
I want to see actually if this one is holding. My stop is very nearly there at 21, so it's not far anymore. But if we see a reversal, it should be here now. Not going to go long on this anymore because I am already long, obviously. But if there's a reversal and a continuation of a trend, it's going to be here now. I'm very sure about
it. Yep. All right, you removed yourself.
Yeah.
I feel like I'm trading very well in the morning, but I'm terrible trader.
But you know why that is, no? Because I know why. You stream with me.
No. Well, yeah, of course it's gonna be. Of course it's you, but it's also the energy levels are much better in the morning. But I also feel like I have a job. I'm live streaming. I'm here. I gotta. I'm supposed to be live trading, and then the afternoon comes. Like I need to come up with a plan on how to lose less money at the later stages of the live stream, because everyone watching here, you see me take like very good trades in the morning. I'm just in and out of the markets, and then I come back at like in a couple of hours, and I'm like tired, and I'm like, oh, I gotta take this trade, and then it's like, oh, it's a bad trade every single time. So I guess what I have to do is just be better. Be better. Stop making mistakes. I guess I just answered my own question there. Just be better. I think that's good. Just be better. Whose market? My market. That's right. That's my market. Benicio says I have luck. There's no luck in this. You know what? I didn't spend 8 years of being lucky. Like I didn't spend 8 years just to be lucky on gold. I create my own luck. This is a good comment. Any recommendations how to deal with closing profits way too early? It devastates me when I close profits early than a losing trade. Okay, look up the statistics. Okay, so how often are you doing this, and how much money are you losing doing it? If you know the statistics of what you're doing, so if you can look at the numbers, say like 75% of the time when I close the trade too early, I will lose money. If I just keep it open, there's a high chance of me making more money. You take that statistics, you put it on a post-it note, put it on your screen. You look at that. Okay, I know that 75% of the time, this is going to be a bad decision. Will you make that decision if you know that you have that statistics? Probably not. And if you still do that, then you should stop trading and focus on why that's happening. Do not continue trading while you're making mistakes like that. You have to figure out why are you making the mistakes, and if you know that you wouldn't be making much more money. Okay, I'm going to be secure in this position here. If you know that you're going to be making much more money by letting that trade run, then it's going to be easier for you to hold on to that trade. Because I do feel like the reason why we close the trades too early without price action confirming is because we think that it might hit stop loss, or we think that it might reverse before TP get hit. But you got to trust the statistics. Also, if you're using a set and forget approach, just uninstall MetaTrader. Just uninstall MetaTrader from your PC and your phone, and just let the trade be.
I'm going to be stopped out now, I think.
Dirk is stopped out, and I am in profit.
Not yet. Yeah, now I am. Too bad. It was a good trade, though. Did I earn something? Oh, I earned $5 on the trade. I can go to Starbucks later and buy a coffee. No, I don't like Starbucks coffee, so
Vinay asking, I started trading 30 years ago. I was in the pits as a 4-year-old, screaming, buy gold.
Buy gold. He's the baby
And I've
boss.
been at it ever since. John says, I'd widen that TP. Good for you.
See, now we see it's reversing.
I will
now.
close this trade right now. Okay, that's a quick little win right there. I don't like that bullish candle. I think we're going to go higher now. Look at the 5-minute. That is a good reaction on support. We've taken out the stops, just like I said we were going to do. And now we're probably going to be moving higher. We're probably going to take in that trade. Okay, we are up. Oh, $19. That's nothing. Okay. Well, something.
It's not nothing. It's a 10K account with 0.19%. That's a lot for a day.
Yeah, it is. Yeah, I guess it is.
But
I guess
yeah,
we're moving
again,
higher now.
that's I want to quickly, if I change here my you might be seeing that. No, you don't. Oh, never mind. I didn't say anything. It is. It's a 50 EMA, but so I might have been taking out really at the low point, and it's going higher now again. But for me, it's nothing at this stage of the trend to re-enter the market. I would rather wait now to see if we first go down to the 200 EMA again. So you might have closed that trade too early, Jonatan.
Yeah, probably. But I feel like that 1-minute candle is too strong for me to stay short. I think we're going to get a bounce here.
It looks like a bounce, yeah.
Yeah.
I agree.
Probably going to get a bounce here.
Yeah.
Don't you guys follow rules? Looks like you're just guessing. I don't think you know what discretionary trading is. Discretionary trading is basically so that there's two types of traders. You have one being the systematic trader, and then you have the discretionary trader. The systematic trader follows very clear rules. Like, for example, when the stochastics RSI is below 30 and you're hitting the trend line for the first time and the price is above the 20 EMA and you get a bullish engulfing candle, that's your enter signal, and then you buy. That's a systematic trader, and that's exactly what you're doing, and you're like a robot. A discretionary trader, however, will trade based on what price is doing at the very at this very moment. So, for example, a discretionary trading is trying to get a read of the market and trying to look at what the most probable move is based on what the market is doing right now, and usually that's going to be based on price action. And even though when I'm trading discretionary, I do follow rules. I have quite clear rules. It's just not that I'm able to quantify it. So one of the rules, for example, is if I have a breakout with strong momentum, I will buy that breakout with a tight stop and a tight TP for about one hour, and I will close the trade as soon as the momentum is gone on the breakout. Another trade that I'm doing is a break and retest, like this would be a break and retest right here. This is a retest of a support level. Now you see that this level is holding as support. And if we break this level right here, I would view this as confirm of support. So if we have a 1 minute breaking above this level, I might want to go long here and perhaps have a stop loss here and a TP at the highs. And as you can see, it's a rule-based way of trading, but it's happening so quick that it's difficult to quantify this with indicators now. But it is systematic in a way, but it's just easier to trade this way discretionary because everything that I have is on the chart here. I have the horizontal levels. I got the price structures, and I have a very clear idea of what I'm doing. Yeah. You're muted.
God, it's really not my day today somehow. I have a feeling when it comes to my technical setup here. Anyway, I want to quickly comment on this one or answer this question. In my opinion, you need to have a a rule set for yourself. Like, I mean, you can be a discretionary trader, but still have a rule set, as Jonatan just told you and showed you. But you have to stick to those rules. Just because, you know, you're sitting there maybe and you're waiting for a trade set up to appear and it doesn't appear, doesn't mean you should enter the trade. Trading is not about the clickety-click action. It's about waiting patiently. And yes, this sometimes, actually often, can mean that you're sitting there the whole day waiting for something to happen, but nothing happens. And then it is like this. It's bouncing
the breakout
off.
right here.
And again, let me show you. It bounced off again beautifully here, exactly at the 50 EMA. So in hindsight, could have been a good trade entry. Why didn't I re-entry here? Because first of all, I was stopped out. This is where my stop was. So I'm not entering at the same price my stop loss was, at least not, you know, when it was 5 minutes earlier, stopped out. And what I honestly speaking don't like about this is flattening here. This whole trend starts to flat out, in my opinion, at the moment. So we see, like, you know, the trend starting out strong here and then becoming flatter, flatter, and flatter. And what that usually, what happens then is that we either continue in a narrow range, like flat, or maybe a little bit to the upside. We actually saw that quite often in gold, or that we see a pullback first, at least to the 200 EMA down there, the blue line. So this would be my preferred setup, that the market kind of sets itself up and then continues higher again. It could be sometimes, you know, that the market immediately picks up momentum, but I think this time of the day, something like this is rarely to see, that you see a pickup in momentum again, because today is not like a crazy news-driven volatile day. We didn't go into the markets this morning and saw everything like bouncing up, down, and go crazy like we saw some of the other days, of course. So I would wait here even now for momentum to return more. Means when we see really a strong move up, and I don't consider what we're seeing here a strong move. I know Jonatan is long, and you are going
right here.
Close now. Yeah, nicely done.
Hitting the teeper right here. We're up $45. That means we're up 0.5% today.
That's one coffee in Sweden. Very nice.
Oh wow! Okay, guys, 4 trades, all winning trades. I gotta quit, man. I gotta take a break. I will be back. I gotta have to get some coffee. Woo!
You get some coffee first. When you're back, I'm also going to get some coffee.
Hell yeah! That's real trading for you guys. Nice. Okay, I'm getting way too excited. I gotta go back. I gotta learn from my 7-year-old. All he says is like, I don't care. I do not care. I do not care.
Get your coffee. Be quick.
Back soon.
I'm coffee thirsty as well. All right. So I'll remove Jonatan here very quickly and go back to my chart. It is actually quite good in terms of momentum, what we are seeing here right now, picking up, as I said, from my experience. And this is also, of course, discretionary, so that I don't have for gold at least data, where gold still is a rather new asset to trade on a lower time frame like this one here. But what we usually see when we see this flattening of the trend, so it looks a bit like, you know, like a hill slowly reaching the top, that we see a reset down to the 200 EMA. It could be, of course, that the reset was finished already here, and now we continue higher again. Might be something I don't see in gold at least very often, but you know, that is okay. Then in this case, my initial trade idea of my long trade earlier was the right one, but my stop management was then poorly executed, because that would mean I really was stopped out on the local low we saw there just now, the one down here. But I'm not so sure about this. It's not a trade set up right now where I say, oh, I desperately need to go long again, especially when we zoom out here a little bit, because of this area up here. I would be surprised if we pierce immediately through that. Although here the overbought situation has reset itself a little bit. Well, let's see. I'm sure sooner or later where there will be new entry. I want to comment very quickly. You guys know that whenever I'm here, I like to comment a little bit about cryptocurrencies, especially Bitcoin. I'm very bullish long-term in Bitcoin. I'm a bit bearish, or getting more bearish as the year progresses, because we should see actually the absolute new all-time high somewhere between April and November of this year. However, what we are seeing currently is like a mini bear structure where we've seen a number of lower highs, a number of lower lows, and it's really where we are right now, a bit decision time. It would be very typical actually to see Bitcoin bouncing here. Again, this is bull market support band. So the red line you are seeing here is 21 weeks moving average, that is exponential moving average. The yellow line, 20 weeks simple moving average. Those flipped here in the past, which is never a good sign. The last time we saw them flipping was actually here. And then we had this extended range of a sideways market, volatile sideways market before we continued. So this actually went on for 150 days. We could be up for something like this. I don't know yet. In order for the bull market really to continue, what we definitely need to see there for the moment is to see a high that is higher than the last one, than the last lower high, which in my opinion was somewhere here around 93,000, 94,000 US dollars. I wish 400K next, but maybe that's something for the next cycle. I think we're a little bit underperforming still the cycle, and I also think we would be somewhere else already within the cycle if it wouldn't have been for Donald Trump, because his talks about tariffs really have been shaking up the normal structure of a market. I think I have like something is that stocks here? Yeah, stocks versus M2. Let me quickly load that one up. That is rather unusual what we are seeing there normally. Give me a second. Internet is not the fastest here in the hotel. No, this is not the one I was looking for, but I can add this one also. So there is a correlation between the price of Bitcoin. Let's go for Bitcoin here. Crypto. And the M2 global money supply, which is M2 global money supply is like the total short-term cash that is available on a global scale, like your checking account, for example, or cash you have at home, or very short-term treasury bills. Those count to the M2 global money supply. And you can see if you zoom out here a lot that there is a correlation between where the price of Bitcoin is and what the global money supply is doing. So usually when you see money supply going down globally, you also sooner or later will see the price of Bitcoin going down. The same applies to stocks, by the way. If the money supply goes up, you will, to a certain degree, see that also reflected for Bitcoin. This deviates from each other. For example, here we saw a leg. So we reached a peak in global money supply, and then with a leg, the price of Bitcoin came up. And we are seeing that right now. Again, we have like the global money supply at record levels. We saw a very steep incline in moving in the global money supply, but we see Bitcoin struggling. So by that logic, sooner or later, Bitcoin should catch up to the global money supply. And that would mean probably prices well above 110,000 US dollars. What is happening right now, that we see rather low prices for stocks and rather low prices for cryptocurrencies, is, in my opinion, really because of Donald Trump. Because of Donald Trump, well, you know, tweeting what Donald Trump likes to tweet about, tariffs, when he changes his plans again. And markets don't like this uncertainty. But sooner or later, this liquidity needs to find a place to invest in, because, you know, people like you and me, we might keep some on our accounts or keep them in cash or whatever. But if you run a pension fund, a hedge fund, a mutual fund, something like this, you need to invest. The last thing you want to show to your investors is that you have like 30, 40 or 50% of cash lying around, because your investors would say, well, this is not the reason I invested into your fund, I could do that at home. I want you to invest in stocks. I want you to invest maybe nowadays in cryptocurrencies through the Bitcoin ETF also again. So I think we might see it catching up if there is nothing out of the ordinary again coming from Trump. However, the time window for this catching up process is really getting slimmer and slimmer as well. Let me show you another analysis, like my go-to chart, actually, when it comes to looking at Bitcoin in a more long-term, through a more long-term lens, a so-called logarithmic regression. You can find this indicator, by the way, coded by me also on TradingView once it loads up here. Here we go. So this indicator, these bands, red bands and green bands here, are a logarithmic regression on the price of Bitcoin. And what is really jumps the eye immediately is that normally the peaks we see, not normally all the time up to now, are somewhere around these red bands to the upside, the bottom somewhere around the lower green band here. And the cycles are always take from the time of the halving until the market peaks somewhere around 530 to 550 bars. Sometimes a little bit longer. The bars here are weeks, by the way, or days. And so the time window for this to happen, that Bitcoin reaches the upper band here, which, by the way, at the moment would mean a price of over 200,000 US dollars, should be somewhere between late April of 2025 and late October of 2025. But with everything happening right now, the more we progress through time, asking myself, of course, is this going to happen, or is this a cycle that massively falls short once again of what price was expected to do? And this is all because of uncertainty, all because of the things we see with Donald Trump. Okay, that's just my 2 cents at the moment on Bitcoin. Have you gotten your coffee, man?
It's brewing. It is brewing.
So let me get mine quickly, okay?
Yeah, let's do that. Okay, guys, I'm gonna pull. The chat. I'm gonna put it into subscribers only. So from now on, you need to be subscribed to the channel to actually be able to write in the comment section. So if you're not subscribed already, well, you know what to do. You know what to do. You go to that subscribe button, and then you hit it. Hit the subscribe. Also, guys, like, I want to thank you all for being here. I want to thank you all for coming in and being part of the live trading room here. This is growing rapidly. We are getting more and more people coming into the live stream. We're getting more and more views on every live stream, and the more likes we get on these live streams, and the more subscribers we get, the more of a reason I have to go to to the management of the The5ers to say, look, guys, people are really liking what we're doing here, and we want to be expanding. Perhaps we're going to be expanding into Fridays. Maybe we can be expanding so we can be live throughout the whole day, things like that. And it's all up to you guys. It's all up to you. So make sure that you hit that like and you subscribe to the channel, so I can go to Saul, the CEO of the The5ers, and say, look at this, look at this. They're liking the live stream. Let's make it bigger. Let's make it better. Let's create the best live trading experience experience. That's the English word that I'm looking for. The best live trading show on YouTube. We currently have a big team of people coming on here, helping to host it, guest traders, and we want more like that. We want to do, interviews with funded traders. We want people to come on here and share their tips and tricks on trading. There's trading strategies, everything. But for that to be possible, we need to push the numbers. That's all it is. That's all it is. And have fun doing so. Okay, right now we're looking at gold. We're going to go over to NASDAQ as well. Wow, look at this. We have missed some incredible moves here on NASDAQ today. For the 5 minute, we're hitting the highs right here. We are hitting the highs on NASDAQ right here. Can we make a trade? All right. Okay, so a comment here usually talked. What is so? I don't like talking about any competitors, but what I can say is there is not a single prop firm out there or a broker that has better spreads than the 5ers. If you want the best possible trading conditions, you go with the 5ers. No other prop firms or not even any personal brokers that you can trade with has better trading conditions than the 5ers. And that's all I have to say on that.
I want to say this is really actually true, and believe me, I've seen them all.
Yeah, I mean, I do have account. I mean, I'm funded with other firms as well, and sometimes I get stopped out on those, but not with the 5ers. And it's like now I'm starting thinking like the way I'm trading, especially the way I'm trading here with the evaluation, I can't trade this way with other firms. It's impossible. There's an edge in trading with the 5ers. Okay, just having the right conditions is an edge in of itself. For example, trading the NASDAQ, 0 commissions. Do you know how many systems I've back tested, how many strategies I've back tested that were profitable in back testing but unprofitable in live trading because of the commissions? Well, here you have NAS, 0 commissions, and that tells me that the strategies that I've back tested in the past that were unprofitable because of commissions, they're going to be profitable with the 5ers. Think about that. There's an edge in choosing the right prop firm. All right, so we're looking at NASDAQ right here, and I'm thinking we're at the highs here. We're testing resistance. Now looking at the 4-hour, yeah, that's a good resistance. I think we might get a pullback here. So a breakout, and I will be going long. A rejection, and I will be going short. Simple supply and demand trading here. Very, very simple. Jonatan not good in scalping. What's not good in scalping? Am I not good in scalping, or is the conditions not good in scalping? You would have to specify that. And if you say I'm bad at scalping, maybe we have to reconsider having you in the. No, I'm kidding. Everyone's welcome. Feedback, criticism is part of the game. You're all welcome here. Any ideas on Euro USD? No, but I can look. We have to. He called it for some. Okay, man. Yes, here. If you get on here, if you come on the live stream and you're able to beat me trading. Okay, so you choose the pair and you choose the time frame, and I will give you a head start of 2 trades. If you're able to beat me trading in a 1 hour, 2 hour session, you will get a evaluation account. Okay. You send an email to tradingroom@the5ers.com. I think scalping is something I'm getting much better at. Last couple of weeks, I've been things have really been moving in my favor here, and I feel like I'm slowly but surely starting to get into the groove of trading the lower time frames and scalping. What I needed to do was basically disconnect, just disconnect from the trades. Just trade what I'm seeing and just leave the emotions out the office. As soon as I enter the office, all the emotions are left outside. And every single trade that I take, as soon as the stop loss or TP gets hit, as soon as I exit that position, I forget about it and I move on. I think that is that's the key. That's the key. Do not think about past trades. Just do what you're seeing right now.
But this is actually true. Scalping is the least profitable form of trading, I feel. More stressful. It is stressful. I absolutely agree with you. And it can be very profitable if you know what you're doing. And if you do not overtrade. If your scalping style is like, I hold onto my positions like 5 seconds, you can be profitable, but the narrower your take profit and stop losses, the more you are dependent that you really have like those super tight spreads low or no commissions. If you're a beginner trader, it's for sure not the style of trading I would start with. I mean, look at me. It took me like 25 years, to get into scalping. As everybody, when I was like starting trading 25 years ago, was like, oh, I want to be a scalper, sounds so exciting, because I like the clickety click action, obviously, or the telephone action back then when I started still. And but then I transitioned into a very long-term fundamental investor and trader. This is also where I'm the most profitable. And lately I've been gotten, thanks to Jonatan, for example, more into scalping again. But you can see even on scalping, I did one trade so far today. You did like 4 trades today. How many were that?
Yeah, I think I got four trades I got here on this. Yeah, I feel like
so
it's not
long speech, very short message actually. If you are super new to trading, maybe start out with a daily charts, 4-hour charts, something like this, where you don't have so much noise. That makes your life much less stressful. And if you're successful on that, well, then you can slowly start trying yourself out. Maybe buy a 5K evaluation account here with The5ers then, so you can try out something more risky, more fun, and still, if you succeed, have a reward from it without needing to risk more than the, what is it, like $50 or $45 the account costs.
So I'm a swing trader, and I believe that this is true. I think there's more profitable swing traders than there are profitable day traders. The failure rate in day trading is much higher than in swing trading, but it all what it all comes down to is personality. But I do believe that there's more people with the personality aligned with long swing trading than it is with day trading. And I feel like most of the people trying to be day traders, they don't have the possibility, the personality to be a day trader. To be a day trader, you need to be able to function well in high stress environments. Like, for example, if you love working at McDonald's at rush hour, then you're going to be a good scalper. I would hate that. I would hate working at a fast food restaurant or whatever at rush hour. That is not something I wouldn't be able to function as a human being. And therefore I'm better off with swing trading. But if you love that action, everything moves quickly, everything's happening quickly, there's always something new happening. If you like that, if that's the environment that you function good in, and you're able to function with the high stress, then scalping might be something for you. I feel like I can scalp very well in the first 2 hours of this live stream. And if I'm going to be honest, like after the first 2 hours, I go on lunch and I just want to lay down in my couch. I'm just exhausted, and I'm done with trading for the day.
Which is okay, I think this myth of, scalpers sitting 14 hours per day in front of their 10 monitors that are all around them, that is not true. I know that it's communicated a lot on social media. I do that 14 hours a day, but I haven't actually met anybody in my life, and I've met thousands of traders. Not only personally, of course, but for a short period of time I was working for a forex broker also, and naturally I talked to a lot of successful traders out there, and all of them, I say all of them, none of them worked like 8 or 10 hours. All of them said, like, you usually have like 2-3 hours where I'm in the markets because this is where the action is. For example, London opening, for example, New York opening, or then if you're in stocks, very often the closing bell, the last half hour of the US stock market. But that's it. Other than that, I'm staying out of the market. Why should I look at the market if they don't present, statistically speaking, the chances of at those odd hours? And I think I said in the beginning, for me, it's always the longer I stare at a chart, the more I'm starting to interpret into that chart also. The more I see things that are not even there. And this is, on this session, just one chart I'm looking at. Imagine you do that with 10, 20 charts parallel. For me, at least, I start seeing things that are not there. So every 2 hours, I need to reset myself. Like after this live stream, I'm also going to have lunch. For sure, I'm going for a walk or something after this before I return and maybe see if I can find something profitable this afternoon. But look at this here. Again, it's like my stop was so poorly executed on this one. I didn't lose money, but my stop was really almost at the low point because it was coincidentally directly here at the red moving average with 50 EMA. When in reality, I should have let it much lower. But we saw, again, a nice bounce here. So trading with a trend, for me, using those EMAs works very, very well. What is it? It's called visual hallucination, seeing things that are not there. Well, I'm not seeing any elephants or or pink mice or something.
But humans,
I
as humans, we are very good at seeing patterns. Seeing patterns is something that has helped us survive. It's part of our part of the brain that is very, very important for our survival as a species. So being able to see patterns is something that we're very good at as humans. But in trading and in technical analysis, it's something that that doesn't really help us a lot because we see patterns and trades that are not there. We might see patterns repeat itself, but when testing, it shows that it's actually not profitable. So I think it's very, very important.
The difference is back then it was like you said, essential for our survival that we see like the tiger luring somewhere in the bushes. But nowadays it's not so much anymore. But you have the same effect if you lie down somewhere on a piece of grass and look at the clouds. After a while, you start seeing things. You start seeing patterns, and the same applies here. So
I'm long here
from my experience, but might be different for you guys. I need to reset my brain there every now and then, every couple of hours, to not see things that are not there. You are long NASDAQ, or what are you?
Yes, we are now long NASDAQ on the breakout. We're above the level. Look at that level. We broke above the level. I think this is a fake out. I think this is the real move. Okay, so now we're going to be looking for profit targets. Where is our profit target? It's going to be those highs right there. Okay, so we're looking for a small move on NASDAQ to take out the trade within that range. Okay, let's go. Let's see what we can find here. The breakout is continuing, looking good. I'm going to be limiting the loss on this one, moving stop loss up. I'm going to be doing so with every new swing point on the 1 minute.
Dude, you're on fire today.
I'm always on fire. Like I've been on fire so many. Like that's what I'm saying. Like before lunch, and I'm on fire, and then I eat. Like maybe I need to eat something different. Maybe I need a salad or something.
Salad, an elk.
Elk. Oh, elk
salad.
You know what? I have what's those animals? Bambi. You know Bambi?
Venison.
Deer. What?
Yeah.
And
I think the meat is called venison, if I'm not mistaken.
How come I didn't know? I know they're called deer. Good. I know they're called deers. We have deers in the backyard.
Eating your flower butts, yeah.
Who's eating Bambi? What are we talking about? Who's eating Bambi?
We were talking about lunch.
Victor.
The man. I say
Bambi, and Victor's like, oh, you got
don't eat that.
Hi, everyone. Right. How are you guys doing?
Good. As I just said, Jonatan is on fire again. I just had one trade, was stopped out at break even in gold. Jonatan is winning all the time.
So That's right.
I should just retire today.
Jonatan has been on fire for many days now. He has been killing it, on fire on many different aspects, on energy level, but as well as on his P&L.
Yeah, but my neck is killing me. I've been sitting in this chair at this desk for too many hours a day now. I gotta move around. You know what? I do have a standing desk. I can actually just look at me. Here we go.
He's going to the basement.
Yeah. I'm underwater.
I miss my standing desk as well. And it is what you said initially. It's really different, trading not in your usual room. within your usual place where you trade, which obviously is my office. Feels different here doing that from a hotel room.
Henry is actually right. My P&L is well, I'm not I'm in drawdown on the accounts, but the thing is if I just stopped trading after lunch, I would have been so profitable. But I'm not going to do that. I'm just going to power through.
Because you owe it to your fan base.
Exactly. All right, I think my time's up.
You're welcome to stay, Jonatan. Don't go eat. Hunger
it's
can
time
wait.
For lunch. I'm gonna be back later, apparently. I will be leaving you.
Go and have some lunch.
Okay, see, you have to send. So if we're gonna have a challenge, you have to come on the live trading room. You gotta come on the live stream. It's not like we're not gonna be trading like that. You're gonna be coming on the. Yes, I'm always ready for a challenge. You beat me, you get an evaluation account. But you gotta come up. You gotta come on the live stream. All right, you have a camera. You gotta have a microphone. And get ready to be beaten in the market. Live.
David asking here about the indicator I was showing just now.
Okay, I'll be back a bit later. See you guys.
See you later. So this one, the red and green channels here, it's called Bitcoin logarithmic regression, and I made this one also available on TradingView. So if you go here to indicators, search, and you type in Bitcoin logarithmic regression, then you should see this one, Bitcoin logarithmic regression, the good, the bad, and the Bitcoin. And you can apply this to the Bitcoin chart. It just works for the Bitcoin chart, the daily Bitcoin chart that is. And one thing you need to do is you need to put the scaling here from regular to logarithmic. This is why it's called a logarithmic regression and not a regular regression. You can find this indicator totally for free on TradingView. I made it publicly available. It's an open source script, so you can, if you want, also meddle with it and change it to what you like to see. I hope that answers your question, David. Victor, man, what are you looking at the moment?
I'm looking at GU. Actually, I'm looking at my chart. I'm looking at GU.
Such a funny guy he is today.
I'm looking at GU.
We're looking so much at gold now, and I said earlier I actually would like to see the price of gold pull back, because one thing I noticed after the London openings, the liquidity starts thinning out, and we kind of start moving within more tiny ranges. So there's nothing like that drives me to the point where I say, oh, I want to engage now at this moment into a long trade again. So maybe you have some nice ideas on other assets for our viewer base out there.
Sure, we can definitely look at the opportunities we have currently on the market. But before we do so, your background looks different, Dirk. And maybe I missed it. Maybe you explained it already, but you are perhaps traveling?
I am. I'm on a business trip right now, but I, of course, want to dedicate some time also to trading. So I'm sitting here in my cozy little hotel room with my setup in front of me, which feels so weird because it's not my usual setup. Everything is not in the place I want to have it.
I know exactly how you feel. It feels out of space, or out of I don't know. It feels different when we're traveling and we try to stream and do everything as if nothing happened, but everything changed almost.
It is like this, really. Yeah.
So yes, let me go to the charts. Let me show our. Yes, I'm already there, as I can see. So what I've been talking about yesterday. We got that move, but before we do so, let's be patient and let's do the top-down analysis. As good traders who are patient, right? The action is on the lower time frame, but we need to understand why and what the context of whatever happens on the lower time frame, where it is happening. All right. So on the higher time frames, on the monthly, we glance through this every day, and it may sound like a waste of time, but believe me, it is not. Understanding, having a good, solid, firm grasp of where you are is very, very important to hold your head leveled, right? You don't get lost in the action on the lower time frames, because you always start from the bigger time frame. You put the priorities, the hierarchy, the time frames, and their corresponding hierarchy in terms of importance. All right, so the monthly time frame, we don't have anything. We're currently between two levels. We created this order block without retesting it, and we are presumably going towards the next one. And this is the monthly time frame. So we're in between, and we're likely on, at least on the higher time frame, we're likely to be heading to that structure, right? Because there's nothing else in between. On the weekly time frame, there is however, before we get to that structure, maybe we'll get there without any pullbacks, but we do have a reversal pattern that is at play, which has its neckline right here. We broke it, and we're coming back to a relevant area where price might push lower for some time. It might not happen this week, might not even happen at all, but we might have at least some kind of a pullback from this structure. It might not happen, as I said, but I'm considering, if it looks like it's going to happen, I want to participate. And if it does so, I'm going to be presumed that price wants to go to that structure below, perhaps on its way for that monthly direction it has, right? So we understand in the monthly it wants to keep on going, but in between it can do a lot of stuff, because the monthly, of course, is a very big time frame. So that's where we are. We're currently in a very interesting area where price could possibly form some kind of a structure to reverse pullback. Who knows? Let's go to the lower time frames. But other than that, there's nothing else. I'm going to take off everything so you can see what I mean. There's no fresh order block. And yes, there is an entry order block on the quasi, but I just mentioned that. On the daily time frame, right, we're getting near to where the action is in terms of intraday trades. What do we see here? We got to this weekly order block, right? This is the weekly order block. Hold on. This is the weekly order block where we might see some selling pressure coming in. It might break structure. It might cause a pullback, but that happens very slowly. What we do see on the lower time frames, on the daily, which is not that low, but lower in any case compared to the weekly, we do have a break of structure, right? A significant swing point has been taken out 2 days ago, right? That was Friday. Doesn't mean, to me, that means it opens the door for price going much lower at some point, either right away or perhaps sometime in the future, maybe later this week, maybe next week, maybe not at all. It's just a possibility. It just shifts the possibility a little bit open for that scenario to happen. So we expect, based on that break, we expect price possibly going lower sometime in the future, right? Could be short term, could be a couple of days from now. However, price doesn't go in a straight line, right? It opened the door, but before it actually does it, sometimes it goes the other way, and that's exactly what it's doing. And before we go to the H4, and there is an order block below us, so it makes sense as well. That order block will serve as a demand zone. That is a call for buyers to come in when price reaches this area, and that's exactly what we see. Price gets into that area, right, that order block, and we see this push up. Makes a lot of sense. That's why I'm showing you guys this pair, because it is showing a very nice technical behavior. All right, so we have that daily break of structure. It is, however, pushing or popping from a demand zone, which makes a lot of sense. Based on this reversal pattern, there isn't anything to the left or in this structure to stop price other than this order block. So on the daily time frame, I'll assume that this is what, unless price changes direction and creates a new structure, which is in the future, which we don't know yet, so I can't consider that into my analysis yet. What we do have is one structure that could possibly be where price is intended to go. So I'm gonna assume that price on this daily time and this time frame, in any case, it wants to reach that target, because there's nothing else, right? Maybe that scenario or that read on the market will change tomorrow, maybe even today. But right now, this is what we have, and this is what we can work with. All right, so this is the daily. So I'm going to assume, based on this order block, that we're leaving a daily, and we're going to at least reach this daily, the next daily in the opposite direction, to before price decides whether it wants to continue higher or go lower, perhaps to do that break of structure and that continuation follow through that I was talking about on the higher time frame. Right. So that's the context where we are. So we're in a daily bullish scenario, presumably reaching for this, going to retest some structure above us. When we go to the lower time frames, however, yes, there is that reversal pattern on the daily, but what we have is the little pop that I just mentioned, pop that is based on the daily order block, right? It's not fresh and it's not part of a quasi, but it's still there, and price will still react to it, right? I was let me see, this one has been taken out already. Oh no, that wasn't taken out. That's something else. We did form, and I was talking about this yesterday. Actually, for those who are in our Discord community, this is the value of, basically sitting next to a trader, right? I don't want to say I'm good or anything, but I'm a trader. I am profitable. I am funded, right? Let's just leave it at that. You can sit next to me and others as Rich as well, our performance coach, and look at the market through our eyes, at least for a little bit. And that's exactly what we did. We do in our Discord community. Every weekday, we have these workshop sessions where we go through, just as like on YouTube. We look at the market, and if there's an opportunity, we call it out. And that's exactly what we were talking about yesterday in our community, where yesterday is, of course, when price was pushing lower here and was reaching this possible H1 order block. This was yesterday. And of course, it's not about signal. Understand me well. It's not about telling you what to do, but it is about showing you the process, showing you what we see. And hopefully you will, pick and choose a couple of things that you might use, or maybe adapt it and use it for your own benefit in your own trading, to your own, preference. You shouldn't copy anyone, because you're not a copy of anyone else. You're an individual, and you need to have a, a custom-made plan for you. However, this is what we discussed yesterday on our Discord workshop, our stream. And if you're not part of the Discord yet, obviously you're missing out. That goes without saying. Hit the like button on the YouTube and join our Discord community by buying an account with the The5ers, and you get the access automatically free without any extra charge to our Discord community. There's a lot of value. All right, in there. So what it's the H4 that I was talking about. We were coming back to this H4, right? It's very, very simple, right? I have to even zoom in. You see those bars as a very thick bar, because it's so simple. We came into this daily order block, right? It popped up. The first reaction tells me the market is reacting to this order block, right? The daily below us. It does it the second time. It opened there. The next, this is the next week. We had that gap opening week. It is bought up automatically, right? Creating that H4 initially, and within that an H4 order block. What does price do? It tells me that the buyers are coming in. But do they go straight ahead and go to the target? No, they don't. They come back, retrace, and give us opportunities to get in. And that's exactly what we got. It got in. You go to the lower time frames, you may get your entry there. And even if you did not, you got another chance today to get in. Look at that beautiful pop. It's such a beautiful. And if you go to the lower time frames, you can see that, man, this is just beauty itself, right? Look at us, that bullish impulsive coming in that we could have seen and that we did anticipate. We don't know what is going to happen. This is just an area of interest. It may or may not happen, but if it does happen and you're there and you're seeing it happening, of course, you're closer to that chance of getting a piece of it. So that's what I'm looking at. I'm basically, obviously, I'm already in profit. So I'm not entering. I'm just waiting for price to reach target, or tell me that I need to, adapt my TP. So that's the trade that I'm actually currently in. So I'm looking at GU, and I'm just waiting for price to do its thing. That's it, Dirk. By the way, Dirk, you're looking good. I think you're looking younger.
Thank you. I'm feeling older by the day, especially when I get up in the mornings and my back tells me, you are not 48 years old, you are 84 years old. But thank you. I think it's the light here, actually, I must say. Or it's because I said
Who knows,
earlier
but
to Jonatan, I need to go on diet. So when you get fatter, the skin also starts stretching and pulling all the wrinkles out. So
who knows? Well, I don't
yeah.
know what it is, but it is to your benefit.
Thank you. I had a good sleep last night, though. Maybe that's it also. So you are, which zone are you waiting for now? The high zone, or?
No, I was waiting. Yes, you mean for my target? Yes, I'm looking. I'm already in, as I said. So that's the beautiful for everyone who's expecting or thinking about this. That's the quasi, the break of the neckline, and it comes back to that order block on the H1. This is the H1, but you'll see different aspects or different quasis in different time frames, depending on the perspective that you're looking. But basically, on the H1, that is what we have been seeing, and what I'm looking for, the completion of this quasi. I don't have a reason yet to assume that this quasi is going to stop halfway. Why? Because we have a daily structure below us. It's not a good enough for me to make it a swing trade, right? But it is a structure, it is a daily, and market is reacting to it. So I need to listen, I need to pay attention. And so I'm going to assume that the market is going to at least try to test this high. It may not go to that daily structure that I mentioned, which is it's not visible here. I know it is here. This is the daily structure. It might not reach that. That's fine. But at least I think this is the first target. This is the completion of the reversal pattern. So I'm gonna be looking to reach this TP. But to be honest, the conservative structure or the conservative TP is actually a little bit before this. I'm going to show you, and everyone,
Makes sense,
it is above, it is before this structure, right? I think it has chances to reach to complete the reversal pattern, but I should not ignore that we have come from a quite bearish trend and structure not so long ago. So that could switch back and not break this high, because if it breaks it, it means that we're gonna go higher. Maybe it's not gonna go higher. Maybe it's only going to reach this structure, and something in here might start. Not something. Price might stop decelerating and start, pushing lower again. And you want to be out of that trade before it does so. And this is one of the best places to put your stop loss. So, if I see the deceleration start kicking in, then and time of the day is also important. Then I will just take my take profit there, right? Because I know if it doesn't hit it by today, I don't want to be in it anymore. And it may still hit it tomorrow, but I don't want to run the risk. I don't want to be in the trade. Asian session comes in, it might just change direction completely, and I'm hanging there, almost getting to my TP, but not getting it.
Yeah, absolutely. Yeah, I actually told Jonatan earlier. I had a trade in gold last week, which I entered it, and when I set my stop loss, I set my take profit, and I had to attend a meeting. So I didn't, of course, not pay attention anymore to where the price was. And in the evening after the meeting, I thought, oh, I wonder, what that gold trade did. And I saw it. It went almost to my take profit, like really it was like 0.05 US dollars away from it, the price of gold, and then it reversed again. And that also was the case because where I set the take profit was also an area of confluence, like a very how to say, a very confluential area of resistance. So I in the hindsight, I should have put it a little bit lower and not say like, oh, it needs to be exactly at that point, because as we approach that point, the price is going to probably see some resistance. So there is a possibility of it reversing before that, which actually happened. But I couldn't close it manually because I was in a meeting. So I was like stopped out at break even in a trade that was like 1.5 hours before.
That's sour, right? That's
yeah, but what to do? It's part of a game. It happens,
Yes.
and I had to think like of actually like something I hear a lot from people that start trading that say like, yeah, when I set my take profit or I set my stop loss, I always experience like, oh, it goes there almost, and then it reverses, or it takes out my stop loss and then it reverses into my direction again. And I thought like, yeah, this is like, because when something like this happens, it's very memorable. It kind of ingrains into your brain. So you think it happens more often than by looking at data. It actually does. It's like one more reason, to keep track of your trades, have a trading diary, or, at least have like an Excel sheet or something where you point something like this out that you can come back to and say, oh, actually, this doesn't happen very often. This happened like the last time 500 trades ago or something.
Exactly that. Yes. That's the power of letting the data talk, because as you said, when it almost hits our target, that's significant. That's gonna, you're gonna think about it for some time. You feel it, emotions and things like that. And it may seem, because you're thinking much more on this trade than any other, it may seem that this happens more often.
Yeah.
But it may not be the case at all. I'm gonna do something. I'm gonna, just for 10 seconds, I'm gonna stop my screen, and I'll be right. I'm not going anywhere. I'm just stopping my screen, my webcam, for about 10 seconds or so. Be right back.
Yeah. So while Victor is quickly away, I want to get my chart on again. And this is what I meant earlier about what I see a lot on gold, that we, after the first kind of volatility is away from the London opening, and we see this flattening of the trend, that gold likes to trade actually in a narrow range. It's still continuing alongside these moving averages. Somebody asked earlier, the red one is a 50 EMA, the yellow one is 21 units EMA. So I'm trading here on the 2-minute charts. So 50 times 2 minutes, 21 times 2 minutes. And it's still like, it still likes to reverse at these moving averages, especially the 50 EMA here, which means the trend is still intact. However, I didn't re-enter the trade because of this flattening of the curve. What I would like to see, what would make me enter a trade again, is when we see, for example, a pullback to the 200 EMA, like something more dynamic. Yeah, I wouldn't immediately enter here at the 200 EMA, because could very well be then that we see it breaking through it, and the uptrend goes. We see a change of structure, uptrend changes into a downtrend. But if we see something like a pullback here and a dynamic move to the upside again, then again I would go long on the pullbacks to either if you want to do it aggressively, to the 21 EMA or the 50 EMA, which might be there. Hard to see from my crude drawings, of course, here. So this is kind of a style when I trade with the trend. Now, I could do something completely different. Also, at some point, I might say, well, I'm getting here the notion that we are becoming toppish, or we are soon going to bottom out. That was the case, for example, here. But in gold, I've learned this really the hard way also. I want to see a lot of confluence, meaning from my 2 main indicators that I use here. One is called G-force, the other one market equilibrium indicator. So those are proprietary indicators. You're not going to find those on TradingView. And no, I'm not going to share them also, sorry, because they ate up a lot of development time, 10 years to be more precise. So this is when I would, if I see like confluence from those indicators, then I might start trading against the trend, because when I get a very big impression, very good signals that we might see a change of market structure from an uptrend to a downtrend. Those are usually the trades where I give the price a lot of leeway. So I usually have like a $50 stop loss there. Thus, why I usually trade 0.1 lots gold, because with $50 translates into $500, so 5%, 0.5% stop loss on the account. But I might still add to the trade, but I don't want to over exceed something like 1 or maximum of 1.5% stop loss in percentages, of losing in comparison to my current account balance. I really put this in a complicated way. What should have been easy to tell, but that's the thing. Sometimes my thoughts are running way ahead my mouth sometimes.
So it happens to all of us.
Crazy, right? And yeah, so as I said, at the moment, for me, nothing. If I see something more dynamic happen right now, could also be later when New York comes in, we really see things like ticking up again, dynamic move, and again, I would be here probably at the pullbacks. Or if I, on the upside, get something like a sell signal and from my GForce indicator a topic signal, then I for sure would try to have a short position, which is kind of dangerous at the moment in gold. Yeah, and I see that more working, actually, honestly speaking, on cryptocurrencies than on gold, because once gold starts moving, it's like immensely strong the move, especially, of course, to the upside at the moment. Like, I think a lot of people are rushing in to buy gold now that it has settled above 3,000 in anticipation we're going to see $3,500 or maybe $4,000 later this year.
That is indeed awesome for all those gold bugs among us.
Which I'm not.
You're not?
No, long term, I don't have any gold, no, because I think Bitcoin is the better gold long term.
I see. Let me see. I think I saw something that I marked for someone asking how to get the Discord link. David, the link, you get it in your The5ers dashboard. So whenever you buy an account with The5er, it doesn't matter if it's the smallest one, you get in your dashboard on the lower left corner, if I'm not mistaken, you will find that link, that Discord icon. You click on it, and that will lead you towards the community. If it doesn't work, if the link doesn't work, I think it does work. But in case you need any assistance with that, just hit the live chat on the website, and they will assist you for anything. It is working as far as I know, and it has been working every day. Let me see what else we have. Someone asking about the GU chart. Yes, I was talking about GU. If that is when you were asking that question from South Africa, we have someone. If I understand you well, I made you confused about GU, and that can happen. No problem. What happens is I know it can be confusing, because as humans we want clarity, right? We want yes or no. We want comfort. We want, for our human mind, that's more comfortable, and it is. And what I just did was doing top-down analysis, and sometimes the time frames are not aligned. Most of the time they're not aligned, right? The monthly is telling you something, the daily is telling you something else, and so on. So but it's an exercise that took me some time to let it, at some level you can understand it just by someone just thinking about it. Yes, of course, the weekly moves differently, and it may tell you something that the monthly is in the other direction. They're different time frame, they're telling you different direction and different signals. But it takes some time in trading to really let that sink in, to put things in their right perspective. But it is still important to try to build that ability, that skill set of, okay, I have the monthly. Is the monthly the information that the monthly is telling me, is it useful right now? It may not be as useful, but at some moment it becomes useful. And if you're not looking at the monthly, you will not know that in advance, right? So it is important to, just to know, okay, what's happening with the monthly. Okay, I'm not going to be using it because it's not aligned yet in my case. I'm going to look at the weekly. Is the weekly aligned? No, it isn't. Okay, I'm going to disregard it, but I'm still going through it, having awareness of what's happening, right? It's something like reading the news, and you're reading, geopolitical news. Is it something that's going to affect your daily day-to-day? No, but it's still important to know, what is happening out there, because eventually these things will um, trickle in and affect your daily life. They might not necessarily, but they might. And that's why we look at the monthly. And sometimes we do have a monthly signal. Obviously that doesn't happen very often, but I think there's a lot of edge. I know there's a lot of edge using a top-down analysis where you're using the monthly, even if you're an intraday trader, because you can position yourself and know what's happening. Sometimes there are things happening on the weekly time frame that I will use for my intraday, and either targets or pain points, trap traders. If I know on the weekly there are trap traders here, that's an edge. I can use that to my benefit. But while I do that, and of course, if you're not accustomed to see all the different signals, one says buy, the other one says low. On the monthly time frame, I said, we're heading to this, we're going higher. On the weekly, I said we have a reversal. We might go lower before we go higher, right? So it's the nuances to put things into perspective. And I know it's not easy, but keep practicing, and keep coming to our stream, and I'm sure you will it'll get less confusing as well.
Beautifully put, Victor, really. Couldn't have said it any better. By the end of the day, you need to find your own style, and this is why I like these. I said this earlier to Jonatan also, why I like these live streams so much. Despite doing this already for such a long time, I still learn like new ways to look at the market, especially from you, Victor, especially also from Jonatan. With Jonatan, of course, we have been doing this for a couple of years already together, streams, but it's so great, see successful traders, see how they do it. And then you're like, oh, yeah, I never thought actually about this approach. I should see if this is something for me too, if I can get an edge for myself from looking at the market, like, for example, Victor is doing. And not copy somebody, but finding like styles that suit your own trading style to incorporate into your own strategy. And that being said, I sadly have to leave now and rush to my next appointment. Thanks again for having me. I'll leave you guys in the more than competent hands of Victor. Is somebody joining you, Victor, later?
I'm not sure. I think I'm sure someone will take over at some point. But right now, I think Mike. No, I think Jonatan is coming in about 1 hour time. I think actually anytime now. It doesn't matter. I'm gonna be here until Jonatan comes in. But thank you, Dirk, for everything. Actually, you make me blush. You can't see it, but you make me blush. You're too kind to me.
No, I'm not. Words very well deserved by you, man. Okay. Jonatan is saying here, Alex is coming soon. So great. Then you'll have somebody at your side. Great. All right. Take care, everybody. See you latest again next week. Let's see tonight. I think I'm going to be quite late back to hotel when we ended the stream already. But if there's a trade that I jumped in today, I might share it tomorrow and jump in quickly. Take care, everybody. Bye-bye.
Bye-bye, Dirk. As you said, tonight we know that you're probably somewhere in Asia.
In Asia? No. I'm not in Asia. I couldn't be farther away from Asia, actually.
Okay.
I'm locally traveling, but
okay.
So I'm somewhere in Germany.
Okay, all right, no problem. See you. Thank you all. Thank you for being with us, Dirk, and sharing everything you do for our community.
Take care. Bye-bye.
Bye.
All right. Where is Alex? Where's Alex?
He's on his way, perhaps. He's doing great
What
stuff.
is this called? Do you see what this is? It's a
pretzel.
It's a pretzel. It's called pretzel. Yeah. It's like bread with salt on it.
It's not bread.
So of course it's bread. What is it? Why wouldn't it be?
Okay.
Of course it's bread.
I think it's pretzel sticks, if I'm not mistaken.
Yeah, well, good stuff. Good stuff. Very good. Very good. Okay. Well, Alex is late. Surprise.
Someone asking about the sound of the mask. Of course, the mask is not supposed to muffle my voice, so I try to make it as loosely as possible. And let me know if it's better now, and if not, then I'll look for some other solutions for this mask. And
Could be chicken
everyone,
feet roll. Could be chicken feet roll.
it could be
But
chicken feet
I
roll,
shouldn't
yeah.
be. I shouldn't be eating when I'm on the live stream. Okay, my pasta is boiling. I'm making like halloumi. That cheese. Halloumi.
Okay.
Halloumi
I
cheese with pasta.
I
It's very good stuff. Very
okay.
good. Mm.
Never heard of it, but maybe I'm sure it's gonna be tasty. I heard
It is.
you're a good cook.
I am a very good cook. I'm a very good cook.
Oh.
Yeah.
Maybe one day I'm gonna visit and check your cooking skills, and we'll stream together.
Yeah, man. Let's do it. Chicken feet soup. Chicken feet soup. Okay, what
right.
are we doing? What are we doing? Are we trading? What's happening? Okay, so okay. That is interesting. I'm gonna close my am I wow, look at my screen. It came close to my stop loss right there. I forgot I was in this trade. It came very close to my stop loss right there, and now we're on the breakout once again. So I guess I'm I guess I'm in the trade. Wow, look at that. That I got lucky right there. I got lucky. Only on the 5ers. Look at the spreads. Look at the distance between that wick and the stop loss. There's no way I would have been in this trade on another broker. Wow.
If you were watching your screen, would you still be in the trade?
No.
But that's the power
way.
of I think that's the power of set and forget. It's actually very powerful.
That's the power of walking away and forgetting that you're in a position.
Exactly. Set and forget. Set it.
That's it,
walk
Henry.
away.
That's Henry. You fry it and honey on it. But you know what's best? Like truffle, truffle, like olive oil with truffle in it, like white truffle. So nice. So nice. Very good.
Someone is having some hard time with EU. Trading comes with a lot of emotion, and not all of them are nice.
I think the better question is, why are you wearing a mask?
That is indeed a very good question.
Yeah, Lulu.
I was asking myself the same question.
Yeah. Lulu.
This mask, of course, is for anyone wondering. It is for not long ago I had some computer virus, and I thought, I need to be protected in any way possible. I do not want to take any chances.
Yeah.
I want to mitigate those risks. So this is one of my answers.
Yeah, these new viruses with the whole, AI and quantum computing, and it's crazy times. Yeah. Right. Okay. So
I didn't. You asked me what we're doing. I am still in a GU trade. That is running, getting close to TP. So that's what I'm looking for. I could do some gold analysis. Perhaps you guys already did that, because I think you guys traded gold in the before I came on, right?
Yeah, that's right. I gotta go get my lunch. I will be back a bit later.
No problem. I will be I'll be doing let me put my screen on, and let me change the screen for something a bit better, like so. All right, that seems to be better, I think. Okay, so and my screen there. All right, so let's look at what do you guys want to look at? Hamed says EuroCAD. Anyone else offering any other pair? EuroCAD You guys want to be looking at EuroCAD? Gold. We have gold in the offering. Anyone offering anyone else? Anything else? Gold. Gold analysis and EuroCAD. All right. So let's we have 3 times gold and 1 time EuroCAD. Dollar, yen as well. Okay, I'm gonna do my best in the I have about 20 minutes. I have about 20 minutes to and analyze. You guys have me for about 20 minutes more. Let's let's do it. All right, so I'm gonna be looking at since we have 3 times gold. Let's start with gold. We'll go down to EuroCAD, and if we can, we'll do some other pairs or time permits maybe when I come back. Pound yen as well, dollar yen, EU. Sure, we love charts. That's why we are here. All right, so let's do gold. Okay, so what do we have? I'm gonna do it as quick as I can, although that doesn't mean it's gonna be necessarily quick. We have monthly time frame. There isn't anything. There is one order block, one demand zone here. We're not there, so not relevant right now. We go to the weekly. There's nothing really to use. Nothing that could signal. We broke a structure not long ago, which is this bearish structure, meaning the buyers are in control. The market structure is bullish, making higher highs. I mean, it's obviously bullish. That's what the weekly is telling us. And the structure below is not relevant right now because we're not there. Other than that, the weekly isn't telling us anything else. So we move on. The daily, we go deeper to the daily time frame. Let me see. We have okay. So the daily time frame. What does it tell us? Same thing as the weekly. We have bullish market structure, but currently we don't have any structure that could signal. The last structure that was a bullish structure was a daily here. We have the last one was actually a bit higher, but price did not come back to it yet, other than the immediate retest, right? Which is this. We had the immediate retest, and you could have, used that. But that's in the past. It's not going to help us. There's nothing really from the higher time frame. Monthly, weekly, daily, bullish, 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 right? But nothing in terms of market structure shift or any structure being created. All right. So on the H4, right? So knowing that the weekly, the daily, and the monthly are bullish, right? If we get a sign, a signal for an H4, because that's the next structure, next time frame we could analyze, you need to understand that all other higher time frames are still bullish, right? Meaning, don't be a hero. Just take it to the next level, or maybe a little bit more, but don't push it too far, because at some point that higher time frame will the influence that they exert on the market will probably start having their influence on the market, meaning market is going to shift back into alignment to those daily, weekly, and the monthly again. So keep that in mind. That is one thing. On the 4-hour, I don't have any break of structure, right? This could be seen as a left shoulder, but in my book it isn't, right? So I mean, if you consider this a left shoulder, that's fine by me, but I don't. This is the head, and this is not a neckline on the H4. The neckline is, in my case, to me, in my opinion, is all the way down here, right? Meaning we have no break of structure on the H4. What does that mean? That all time from H4 all the way to the monthly, nothing's telling us to go short currently. So based on the market structure, I should say, what we do have is market order flow. Is the order flow has switched. We can see we did take out this swing low, which I don't consider a neckline, but it is still a relevant swing low. We took it out, and that accelerated the order flow. We have a bearish order block being created. Immediate retest creates another one without retesting the previous one, creates another one, and it hasn't created any H4 again. So far we have sellers coming in. We did have an opportunity yesterday for going short. I think it was I'm not sure who was. I think Jonathan was shorting it. If not, then perhaps Mike. Well, I think Mike was took a short here. That was the opportunity we had when we retested this H4. So far, we did have a little bit of of buyers coming in. We were unable to break the recent low. Doesn't mean it's going to hold forever, but so far that swing point happened at a higher than the previous one. So are we switching back? To me, it's not clear yet. We just had some buyers coming in, so we did have an order block being created on the H4, and we had the immediate retest. So on a very recent last couple of bars, H4, the momentum is to the upside, right? Until we get back to any structure that could stop us. On the H4, there is this structure, which hasn't been retested again. If we retest it again, it will be the second retest, meaning it's not as strong. We could see a reaction, but probably less of a reaction. If the market is actually changing, it could just go through it. Remember, the daily is still bullish. We don't have a daily bullish, in alignment. So I would expect that we not expect. I think we need to wait to see if we have, because on the lower time frame, let's go to the H2. I mean, you can see this quasi, right? See that? That's the quasi, and we're coming back to a relevant structure. The question is, this H2, is it going to complete the reversal and possibly going lower or not? That's where we are right now. So this area is it's not the normally I put lines when I'm ready to take. Hi, Alex. Oh, how are you doing? Alex into the background, preparing to come online in a little bit. What we have, so this is, I don't mean to say that this area is an area of interest to take a trade necessarily, but this is the area, to me, this is the test today for gold. Are we maybe not the test, but the next test in any case? If we are able to break through this, then I think we have a good chance of we are actually seeing the shifting of the lower time frame, the H4 and lower, get back into alignment for the bullish structure again. However, if we don't, right, if we can see a reversal in this area, and it might happen, with some trapping of traders, it might be something like this. It might even push a little higher, but eventually go the other way. Might even go, with spikes. Gold can, trick people into thinking one thing. It might even do something like this, but if it is eventually respecting and creating and not closing on the H2, which is crucial because this is an H2 structure, H2 quasi gets invalidated when the H2 closes above this line. As long as the H2 doesn't close there, you still have that door open for a reversal and possibly continuation to the downside. So it's the jury is still out there whether this is going to reverse back into that downward trend or not. How are you doing, Alex?
I'm doing fine. Let's have a look what you're looking at. You're looking at gold.
Yes, and I was just saying that the area of interest to test the market, or not test the market, I would say this is the test of the market to know if if it really can continue lower, the downtrend we have seen so far, or we're shifting back into bullishness that we never left the bullishness on the daily and higher time frame. So if I zoom out, this is what I mean, right? From this point, we have been making lower lows and lower highs, and the question is, this is anything that happens in here is actually this is the swing point to be broken. Anything that happens here doesn't really mean much until either it takes this out or it takes this one out. But on the lower time frame, this could be, because we had this push down, this could be where the yellow lines are, where we could see the resolution of what the market wants, what the collective market participant have decided by pushing the price lower or breaking and continue on the buyers the bullish order flow. So that's on gold.
Yeah, it just
Let's
looks
see.
like, your classic break, break continuation type of trade. If we just have a look at it on just the daily, it just looks pretty simple what it's doing, and it just looks like it's continuing up. You've had like this kind of like flag pattern in an uptrend, and it's just continuing on. Even, I bet you as well, I haven't looked at it from this point, but that's also coming into a 618 and a 50. So you've had one hit here and it didn't break lower. So you've had this, it's come back on. You've had 3 times in that level, which is, if we go on to a 4 hour, it's hit this level 4 times and you've got a double bottom. I think this is just going to continue to push up. You've got these areas here, you got these areas here, you got these areas here, which probably everybody's looking to short gold at the moment, and I would be surprised if they don't get taken out this week. But it looks, just looks like classic break continuation trade, break retest continuation.
Yeah. I like how it's hovering above the moving averages, meaning it's right there where it has to be for a possible continuation to the upside. Someone is dancing, someone is happy.
Have you changed your MT5 around?
Yeah. I would like to guide you all in the direction of this way. Look at that. Look at the history. What's the color? What's the color of the profits? It is blue, which means green.
Oh, I was looking at the commissions for a second. Very nice.
Yeah, look at that. Look at that.
Very nice.
In the winning freedom now. Do we have a 100% win rate today? Yes, we do have a 100% win rate today.
Oh my god. Oh my
and
god.
that looks very, very strong.
I do
exactly
like
6
have
minutes.
a look at GU while you're there. Look at GU and see if you can get into another trade on GU on a break retest continuation.
No.
Why? You might as well have a look at it. What are you even looking at? You're looking at gold.
This is NASDAQ.
Oh,
Zero commissions, baby. Zero commissions. Yeah.
NASDAQ. When have you ever traded
and
NASDAQ?
we're like, what do you like? Yes, you see a drawdown, but I do not see a drawdown. I see a profitable day. You see drawdowns, I see profitable days. We are built different.
It's in the eye of the beholder.
I calculate my profits by the individual trade, not by the overall account.
The equity doesn't.
A trade by trade basis.
Position by position.
Yeah.
Let's have a look. What are we looking at on GU? GU
has turned a very nasty turn. Is there any news? Did I miss something?
No, I just think after such a move up.
Yeah.
Didn't you say that I had a fetish for clowns? And there's you wearing the clown suit every single day.
Okay, let's not get there. But you're the one. You. Was that me? I thought that was you. I thought that was you coming out.
No, that was you. Told me that I've got a thing for clowns.
Yeah.
You're looking good as a clown.
This that's a bit weird, isn't it? Well, Alex, I do like you though, but I actually put it on because of this guy actually telling me to put it on. Oh my God, we got Griff here. Look at that face. I wish he was on.
Oh God, sorry, it was the music.
Okay, can I add you? Yeah, okay. Welcome, Griff.
Hey, what's with the clown outfit?
Yeah, so I lost a bet. Well, actually, it was no bet, but I told the audience that when I'm in drawdown on the account, I have to wear a clown. clown suit. And that's where we are, you know. Although on a day-to-day basis, very profitable today.
Yeah, great. Well, you know, I've not seen you in a clown outfit before, so you must not be in drawdown very often.
Oh, you're new here. I've been in the clown suit for last I don't know 4 or 5 live streams or whatever. But I am I'm gonna leave you guys. I have food in the frying pan. What?
I haven't had lunch yet. You're making me hungry.
You know what halloumi is? Halloumi?
Okay, now you just put me off.
The cheese. The cheese. It's cheese. You fry it, and you put a little olive oil with truffle taste. You like truffles?
Don't forget the honey. Apparently,
honey is very good.
Henry,
honey is very good.
Henry, do you ever sleep, mate? Do you ever sleep? He lives in Australia as well.
Yeah. No, it's definitely problematic. Gotta call the authorities in Australia, like the socials authorities. Like, tell them we got a guy here that never sleeps. He just trades all day.
Trades.
I'm gonna take a break. I'm gonna come back in an hour, if I'm not mistaken. I'll leave you guys, everyone. I leave you with Griffin, who has a lot of backtesting experience and a lot of gold nuggets with how to get your edge through backtesting or data in general, which I love.
You know what I did yesterday?
Thank you.
So yesterday I was wearing this, right? And I was just going upstairs into the kitchen, and we have a big window, and I got my neighbors like close. What's up? Hey, Victor. See you later.
Bye-bye.
See you later, mate.
See ya.
So I forget that I have this on, okay? And I get eye contact with the neighbor. And he's just staring at me. You know, like I'm always at home, you know? It's like, this guy just walks around. Every day he's at home alone.
Maybe he thinks that's what traders do. God, those bloody traders.
Yeah, man.
God.
Okay. Griff, welcome to the live stream. I am going to leave. I'm going to leave you in the very capable hands of Alex. I will be back as soon as my lunch is in my stomach. See you soon.
Sounds good.
What are we looking at today, Griff?
Today, well, I was just looking at EU for a reversal. You know I trade the 1 hour, so maybe you can, I don't know, you can let me know what you think. What time frame do you mainly trade, Alex?
5 minute, mate.
5 minute.
Yes. And we can go for a trade that I did today. I got caught in a short, and then I had to switch long. And we can go you're looking for a reversal here. On the 1 hour.
Was, yeah, but then on the 1 hour at least, the most recent candle just closed with a wick, and for me, I'm not keeping my order on after that.
Yeah, I'm looking. It's funny because I'm looking for a long on GU, and I'm just looking at these areas here and that 200 EMA. So that's what I normally aim for. I normally aim for those areas. You've got a nice level though. You've got a nice daily level just here. It's a difficult one. Don't know, but I'd be personally looking for a long, to be honest.
Yeah, it's cool to hear different perspectives. I was talking about this with my friends recently. We were talking about how there are some strategies which just pile on as many confluences as possible so that you're getting involved in the markets alongside all of these other traders trading all of these other strategies. So it's great to hear that, you know, you would have also been like you would also be long on EU, considering that we trade completely differently.
Yeah, it's also confluence as well. If you know somebody's always wrong,
yeah.
So you know, it is nice just to listen to what everybody else is doing. But I'll tell you, I'll go through the trade that I had this morning, and then you can tell us why you're looking to take it short. So This morning when I came back into the office, if we just take price, we'll take price just to there. So obviously me coming into the office this morning, this is how everything looks. So we've had that kind of rounded type of price action. We've broken down, taken out all of these levels, and we basically had a retest right here, and now we're having a push down. We've got this low, which I'm looking for it to target. We've also had this nice engulfing, well, I wouldn't say this, we had this nice candle here and then another quite high volume candle, and we've got a little bit of consolidation. Now this candle there, it just looked like price was extremely heavy. So when I came back in, let's have a look. Why is it like that? It's very strange. That did not work.
And you were looking to take this short this morning.
Yeah, give me 2 seconds. It feels like this is just not working, this replay feature.
Do you use TradingView in your web browser?
Yes.
Yeah,
yes.
I do the same.
Yeah, let's have a look. So yeah, price is coming down a little bit. Let's move this to London. And all I wanted to do is get into this action so it would take out all of these lows. So the idea was basically the break and the retest of this area and then a continuation trade. So let's put it like this. So taking that type of trade. And this was live this morning that we did it in the ABL live stream. So that was the trade. And I was looking for it to take out all of these lows. Now, unfortunately, what I didn't really, and it's good in hindsight, but I'm shorting in an area of high demand. You see this area as demand, you've seen this as high demand, you've seen multiple areas of demand. So I'm basically shorting into demand. And even though we had a nice push down, the entry was on this candle right here. We pushed down, but then we were making that kind of, on the lower time frame, we had that kind of head and shoulders type of pattern. So it just didn't seem like it wanted to push down. So eventually I got taken out of the trade, which you can see right here. My stop was actually a little bit lower because if it wasn't going to break down there and it was going to start pushing up, there's no point in me having my stop there because price is going to push up anyway. So that was the theory of why I had to stop a little bit tighter. So once I was taken out of there, the idea was that if I'm in demand right now, price is not pushing down, then I actually just want to be long. So I ended up going long off this area right here, stop right below the low, and I targeted just these highs right here. And as you can see, straight off as well. So it was quite an interesting, nice. I had to lose 1R to gain 2R.
Yeah.
Let me pull up the deal as well.
That looks good. It was good of you to switch.
Yeah. In hindsight, though, it would have been better. You probably can't see it very well now.
Yeah.
In hindsight, it would have been better once I actually saw price doing that kind of consolidation and a lot of this barcoding in an area where it's supposed to push down. You would want to see volume coming in and it pushing down. That's where I should have been like, okay, it's not actually doing it. I could have actually got out in a little bit of profits before switching my bias. But still, it was a decent trade back in, but the first trade could have been a little bit better.
Yeah, that makes sense. Would you say, I obviously don't have a lot of experience with the lower time frames, but just after you would have set your order, there were like triple wicks. Would you put a lot of weight on those? on the lower time frame, because for me that would be like I'd be removing my order after the first big wick. But if you have triple wicks, I would definitely not have my order still on. But I don't know, lower time frames, does that play as much of a role?
I agree with you. The way that I trade normally, price is supposed to go into profit fairly quickly, especially on the lower time frame. So if it's dawdling like this, it isn't what I'm actually looking for. So you are right. After really this candle here, after this push down, because this is where I entered, after this push down, for it not to continue a little bit more, pull up and then do something like that, that should have been my first obviously sign that okay, there isn't enough momentum in this area and I'm trying to short in to demand. When it did, the same thing where it couldn't actually close again below those lows, that should have been the second confirmation that this position wasn't the right position. So really I was actually late letting it come back up and taking me out here, to be honest. That was the mistake on that trade. The good thing about that trade was, because I was wrong, I decided to get long afterwards because I was wrong on the position. Now, unfortunately, I didn't capitalize on the big move because it could have, it kept on pushing. And how I like getting in, I basically do, that's it. I look for a 2-to-1 risk to reward ratio. I get in at a 618 and I continue it up to an extension of a 50, just keeping everything super simple so I don't have to think about it. And that's it.
That's super interesting. And is it a part of your trade plan to kind of have that discretionary element where you can close a trade when you feel like it might be going against you, like you did in you said you could have closed this sooner? Not really. Okay.
It's supposed to be set and forget, and the majority
so you did do the right thing.
Forget. But there are times where sometimes if you see that momentum's not on your side, then get out and switch the bias. Which I did set and forget because, that's every time I play around with the position, normally I leave, I mismanage the position because I'm moving stops or anything like that. The best is just leaving it alone. But the thing is with the 5 minute or the 1 minute is if the momentum is clearly showing, I look at the first few candles, if it's showing that it's going against you, then sometimes it's just best to get out and go the other way, especially if you've had, these highs being taken right here. That just shows there's a lot of momentum. So just a break and continuation on that level would be, with new eyes, would be the best type of trade to take. But what are you looking for on the 1 hour? Because the 1 hour is definitely not my forte.
Yeah, for GU.
Yeah, do you want to pull up a chart and show me what your rationale for taking it short?
Yeah, can do. Well, I didn't say I was taking trade short on GU.
I thought you were going to take short on the EU. Sorry.
Long on EU. I was looking for a reversal opportunity around here. So I would have my order similarly to what you described. Actually, I'd have a pending order around here. Normally with a 12 pip stop on EU.
Where's your? Let me pull up your chart. Sorry.
Oh yeah, sorry. Let me know when you can see my. Yeah, that good.
Look at them charts. Ooh, damn! How clean is that, mate? Every time I look at other people's charts, it's Victor, not Victor. Stephen from ABL has got some of the cleanest charts, but you also are up there with some of the cleanest charts, mate. Congratulations.
Yeah, so I guess similar to what you just drew on GU, I feel like this is kind of a similar, like if I drop down a few time frames, it is kind of taking a pending order from like these levels, these highs that you draw for this kind of entry model. So it's interesting because I'm just doing a similar thing on the 1 hour here, if that makes sense. That's what you were looking for on your GU long. Yeah, I would have, unfortunately, I was away from the charts at the time, but I would have had a pending order set here. And when I did check the charts, which was just before I joined the live stream, we had this candle with a big wick. So after that, I would have removed my order. So I'm not looking for anything here now, because this suggests that there's still weakness. I would have preferred a candle to kind of tag me in and continue, or for a candle without a big wick, just showing no shift. But for me, this shows weakness to the upside.
Yeah, so you're looking for a quick tag into a level and then a straight push off. You're not looking for it to push off, consolidate, and then come down to the level and then push off. If you know what I'm trying to say.
Yeah, I want like tap and go, similar to you. But it's interesting what you mentioned about you kind of have an element in your trade plan where, you know, if you see weakness or if you see a reversal start to occur, that it's within your right to remove the order, like you said here on GU. If I drop down to the 5 minute like you were doing, you know, you took a position around here, right? Let me move my indicator. It is interesting because, like, with my trade plan, no matter how much weakness or kind of danger to the upside that I see, I'm not allowed to remove my order, which is great because it's just like really mechanical and I don't even have to think about it. But sometimes it is really obvious that price is going to reverse. And
but you hold firm and you don't move it.
Exactly, that's what I do. I mean, sometimes there's scenarios where price is coming back in, you know, big candles super aggressively, but I'm not allowed to remove my to kind of like close the position early. And it's worth thinking about. I mean, if you're experienced traders like you and I, like I think it's definitely worth exploring, you know, closing a position early. It makes a lot of sense.
Yeah, closing the position early and sometimes just taking the other side is. I've had some of my nicest trades doing that. To be honest, a lot of the times as well on assets like gold, where when the candle is moving, it looks awful, and you're like short, and then eventually you actually see that it's not a short. Maybe it's just a stop run, come into a level, found loads of orders, picked loads of orders up, and then it's closed above a level and now it's pushing off. So if that's the case and you're stuck short and you can see that it's just picked up loads of orders and it's moving the other side, why would you hold the position open? Why wouldn't you just close it and then take on that other side? Now, the only times that this can be an issue is if we're stuck in a range. Now, I can chop my account up quite a bit if I'm stuck on a range on the 5 minute, because sometimes you can, you're getting a lot of signals and momentum, you know, momentum looks fantastic until, you know, it doesn't look fantastic. And then you can be chopping and changing. But once you have something that is, you know, moving, then it's funny when we say movers as well. Like I spoke to a guy, I was at a wedding last week. It was a religious wedding, and these guys, they're all, I'm not going to go into it, but there was a guy there and he was in finance, didn't tell me what kind of finance or anything like it is. And I started talking to him about prop firms. And it turns out that this guy was actually quite a big asset manager in New York after he gave me his card and I looked him up and after my friend told me about him. And he says, I don't know why you would want to trade currencies. Like, there is no edge in currencies. And I'm thinking, I'm like, that's interesting to say, you know. And because he primarily trades low cap equities, and he says the reason why he only trades those is because there's been a massive, you know, misinterpretation of the price, and he can see where there's, you know, mispricing in certain stocks, and that's where all the edge is at. So I wonder what you think with that, like, because we trade currencies. I've made great money trading currencies, but, you know, it's like, what are your thoughts with it?
I feel like I agree with that guy to some extent. There's definitely more money to be made and maybe a sharper edge, but there's also more money to be lost in many ways. I feel like the Forex markets having so much liquidity and volume, it makes it quite consistent. It's not as high risk in many ways. You know, you're not going to experience as much slippage as you would on trading the instruments that this guy describes. I feel like you can probably trade the same way as him and achieve insane win rates. But then, you know, you could also another year have like 100% losing trades. Do you know what I mean? I feel like with Forex, you can get, you know, 55%, 60% win rate year after year quite consistently.
Agreed. Do you know, that's the funny thing is that, so he even said to me, the win rate, he didn't really give me a number of the win rate, but he said, you know, maybe 1 out of 10 plays actually works. And he says a lot of these big traders that made a lot of money, they probably wouldn't pass a prop firm account, because most of their big bets have always gone below 10, like more than 10% drawdowns. So he's like, it's quite an interesting concept, but we have loads of traders. I've seen loads of traders, even with 90% win rates, blow accounts and not make money eventually. So it's like, kind of messed me in my head a bit. I was like, that is super interesting. You know, these guys with looking at low cap stocks, and then there's us on the 5 minute, or me on the 5 minute, you know, trading currencies. It's quite an interesting world, you know.
Yeah, there's a lot of different methods, and I guess it's all up to your risk appetite. Like, I know a guy that trades stocks, maybe not low cap stocks. And like, I think last year he was making me really jealous because he was winning like every trade. Because I feel like betting on a company is a lot easier than betting on a whole country, or, you know, two countries in the case of a currency pair. Because there's less kind of fundamental influence, I guess. It's a lot easier to look at like a balance sheet versus like GDP and all these news events, and I think through that you can get a really accurate trading strategy. But the same way, you can lose a lot of trades as well. I think it's easy to lose a lot of money. I'm happy with Forex for now. I have explored indices. Because I suppose that's the next closest thing to like really high liquidity instruments. And obviously S&P 500 and NASDAQ and things are very trending as well, which is great for my style of trading. Haven't managed to make it work the same as with Forex yet, but it is something I'd like to look into more in the future.
It is quite interesting. Do you like then an asset that is very fast moving, or do you prefer something that is slow moving? Because the way that we trade on Forex, some would look at your chart and be like, okay, you're a trend trader, but really it's only ranging between a couple of percent. It's like not really in a trend, it's actually just in a
it depends on the time frame you're looking at, right? Like maybe it's a trend on the 1 hour, but when you zoom out enough, it's just within a big range. So it's not a proper trend. I guess I would call myself a trend trader. But yeah, I know what you mean. Trend trader on the 1 hour time frame are not proper trends.
No, I guess it's just, you know, market structure is just market structure. You know, if something is going higher highs and higher lows and it's trending upwards, then obviously you're going to get in on the lower highs, and you're just going to keep trading until the market structure breaks. So it doesn't really matter. It's still all the same stuff.
Just to go back to what we were speaking about before in regards to like closing trades early, and how in my plan I don't have a system where I can close trades early. And I've got, as you can see on my charts here, this is a trade I took short, and I managed to reduce my risk down to about 0.5% risk. So 1% trade, reduce it to 0.5% risk. And at one point it was running, let's see. This was just the most recent example. I have much worse examples. At one point, it was running at 8% profit, but I hadn't had an opportunity to lock in any more profit, because I can't lock in profit until we get a counter trend candle and then a break of this low. So we got the counter trend candle here, but but then we needed to break this low before I could trail my stop loss.
You're just waiting for the high, basically, just to put, you know, like a pivot high to put your stop loss above.
Exactly. So we break this low, and then I'd be able to trail my stops. But unfortunately, we didn't actually break this low because we just got these consecutive low breaks, counter trend candle, and then we never got this low break for me to trail my stops. And unfortunately, this led to it coming all the way back from 8% profit to a 0.5% loss. And this has happened a lot to me with my trading strategy. And you know, I call it discipline, but maybe it's more like negligence. Like, for example, here, these candles are clearly showing a reversal is coming, you know, and like I'm watching these candles coming back, or maybe not at this time because it's at like 1 a.m. But sometimes I'm seeing these candles coming back towards my stop loss really aggressively, and I'm not doing anything because I'm following my plan. But perhaps in reality, I should probably explore closing these trades when I feel like prices shifted in the opposite direction. And with obviously early on, it was good for me to just like blindly follow my plan and be disciplined. But I think maybe at this stage, it's better for me to, I found in a lot of elements actually, it's better to be more discretionary and introduce a bit more of my experience, because obviously here I could have probably closed the trade out for maybe like maybe around here I would have felt like I'd seen a shift and got a 4% win, or maybe even here I got 2% win, but in the end I got 0.5% loss. And I've got so many examples of this. I had a GU trade in 2022 which ran to 40% profit in one trade, and it retraced all the way back to 10% profit because I hadn't had an opportunity to move my stops. And at the time I was thinking like, should I have broken my rules and, you know, closed the trade? Because a few people did. They'd never seen such a big trade and they were tempted to close it. But I was like, no, I'm following my plan, because I'd be kicking myself if it goes to 60% or 80% and I'm able to lock it in. But yeah, like I think it's worth discretionary elements.
Yeah, you won't let any kind of your intuition kind of play into your trading at all.
Not with the management. With the entries, very discretionary. I have a lot of discretion in that. But I've like just our discussion, you made me think like when it comes to trade management, I haven't introduced discretion there yet, and that's something I should definitely consider, because there are a lot of scenarios like this, maybe 2 or 3 a year, where I end up missing out on a trade because I've followed my risk management rules so religiously, and I feel like I'd probably make more than I lost by just following my plan, but by being more discretionary, because I don't think there's very many scenarios where we're trending, I haven't had an opportunity to lock in profit, we come back quite aggressively, and then it continues. Like, this doesn't happen very often. Normally when we come back aggressively, we reverse and I'm tagged out. But I just follow my stop loss management rules so religiously. Food for thought there.
Yeah, but then it's like at the end of the day, do you change something that's not broken? Really, it still makes money, and it's still you're still taking money out of the market, and I've seen your payouts and things like that. So it's like it's difficult. It's difficult because when you're also trading a certain way as well, you don't really want to, especially when something's working, you don't really want to change it up or anything like that. I've been quite interested in getting into more the stock market, but I'm so used to trading the way that I trade on Forex, and it works. So it's like, why would I add just more assets to everything? Why don't I just keep doing what I'm doing?
I'm with you.
But it's quite an interesting conversation. So I think you may be right though. Need to add something back to bank profits, because 8% is a decent amount. 8% is an amazing amount, especially in currencies. 8% is a ridiculous amount in currencies.
I think it's definitely worth considering. I'm just trying to find this GU trade. I mean, I've brought one up here as an example, but where I wasn't able to capitalize on the whole move. And another scenario where there's a clear shift candle right here, And like, if it was up to me, I would have closed the trade at this point because it's obviously going to reverse. But my management rules, I followed them and I made slightly less. And I think my discretion would save me more than the management rule at this stage of my trading. It's not something I've revisited since I started because it's just like set in stone. Yeah, I think that's definitely worth exploring.
How often are you actually in front of the charts though?
I mean, when I'm in a trade, I check it every hour at the close of the candle. But otherwise, if I'm not in a trade, maybe like every 2 or 3 hours.
Fair enough.
Yeah.
So somebody said about gold. Somebody said about shock on gold, which basically means change of structure. So to be honest, I'm still liking gold for actually going long. So I have just entered an order on gold right here. Pull that up. So I do like gold. I do like the fact that DXY, what we've been talking about, is starting to push down. It's funny though, because you can see so many different things. The DXY is still, it's just come up, it's found all of that area, and we were talking about earlier that it was going to start pushing up into, facilitate kind of that retracement on the higher time frame before maybe pushing down, something like that. But at the moment, I like gold for a little bit higher, and it's funny because it's at all of its all-time highs, and it's interesting to long something when it's already so expensive. But that is what I'm looking at. Be interesting to hear what you think about gold, Griff.
I'll bring up my charts here. Let's see. Gold isn't one I've really looked at too much in the past, just because I feel like it can be quite volatile. Like, we get big moves, just a little bit, just a little bit volatile,
little weeny bit.
Yeah. Like, it doesn't. For long periods of time, it will go up, range, come straight back down again with momentum, which isn't ideal. I mean, it would probably work quite well with the liquidity sweep entry that I'm looking at. But yeah, for my trending entries, it would be a bit aggressive. Yeah, I think you're right on that.
Very well. Gold really likes. Let's say if this was something like GU and it's already started to push up on the EMAs, you would really see it just continue. But gold really likes to take these places out, all of these kind of micro structures, but leave like the higher structures maintained. Obviously, if it comes down now and takes me out, I really don't want to be, I don't want it to be in this trade because it's just shown complete weakness. And I think it would aim for something like that. But it really loves to take people. It's a little bit like Bitcoin. You've traded Bitcoin in the past, haven't you?
I mean, I've invested in Bitcoin like long term, but not traded it.
So futures trading short time frames on Bitcoin, it really likes to hurt as many traders as possible before it actually makes a move. That's just the same with gold. Have you ever noticed when you're in trading in gold to people in the audience, and it will take you out and then go completely the opposite direction in your favor, but first it puts you under absolute hell. It's that kind of like, because all of us like putting our stops in these areas. If I'm trading this move, I get a retrace, I want my stop under here, especially if I'm a day trader. Ended up something like that. Same thing with this little move. You've got that kind of micro structure there that if that was EU, that would be totally fine. That would be like a 10 pip stop. You'd be totally fine just to keep pushing that up on a day trade. But look, it comes and takes everybody out and then pushes back up. So it's like really wants to hurt traders before it actually does does anything. So
yeah, I can definitely see that.
yeah.
But that's why the liquidity sweeps kind of at that kind of entry model would probably work really well.
What do you look at for like liquidity sweeps? What are you working on?
So the last year I haven't had a lot of trending market opportunities, so I was looking for a more range bound entry. But it's funny because the more I've looked into liquidity sweeps, I found that they actually work best as a trending entry, which is quite ironic. So I've ended up just making another trending entry rather than a range bound entry. So I guess as you described with gold or Bitcoin, like big uptrend, I can probably bring up my charts to kind of describe it a bit more clearly. Let's see.
We'll see what it does right now.
Right, can you see my screen at all?
There you go.
Oh, cool. Thank you. So previously, liquidity sweeps, I'd be looking for already in a ranging market, and then I'd be looking for the liquidity areas that I primarily focus on are below strong legs of momentum or above strong legs of bearish momentum. So let's say we've got a range. I'll just draw one out like this, and then we've got a really strong push up. Now I'm looking at the liquidity based on this push up rather than the range. This range strengthens the liquidity area, but it's primarily from the stops from the people in this buy move. And then all I'm looking for is break into this and then just a retracement candle and then just targeting the highs essentially. So this was the original kind of model. But I found that you can get quite big losing streaks with this strategy. And one way that I found to filter out all the losses is by having price trending in prior price action. And now I've just got another trending model. It's basically, if you know the flag entry that I trade, it's basically just a flag, but on a larger time frame. You know what I mean? It's just like a 4-hour flag instead of a 1-hour flag, where I've got the momentum, got the push up, breaking into this liquidity area, and then getting an entry candle, which is quite similar, just different time frames. So yeah, I ended up just making.
It doesn't have to be complicated. That's what I'm saying, man. It just doesn't have to be that complicated trading. Like super clean. Like it just reminded me of a trade that I setup that I used to do on futures, on crypto futures, was the same type. You had a range, and then I would have also level two data, and every time there was like a deviation above the range, I would see how many people were getting long at the top of the range. And then when price closed back inside the range and all of those were trap traders, I was really happy with taking a short there back down to the bottom of the range. And I used to do that on a 5-minute chart on crypto, and I really enjoyed it until I wasn't really enjoying it, you know. But it's like, but there, those like, I like that kind of like trap trader type of concept, that a lot of people are in a position and now they've got to offload their position, especially in a range. It just ignites price to go to the other side. It's a little bit different, I think, in FX, because the market is so liquid, and it doesn't, you know, little players like that, it's not really going to do anything. But if you're in a thin market in some of these crypto coins, it really matters when you've got a lot of traders trapped and now they actually have to unload those positions, and it can cause some big violent moves to the other side, which in Forex it's not really going to happen, because, you know, a lot of it is, you know, commercial buying and selling and stuff like that. And it's
I'm with you, because the whole, I mean, I don't really like using the phrase liquidity too much in the Forex market.
Overused, I think, a little bit.
Yeah, because like I said there, I'm looking at kind of the stops below a big move up, but in reality, the stops there are not a big portion of the liquidity. It's more support and resistance, to be honest, because the big players, banks, hedge funds, don't use stop losses. They've got so much liquidity, they don't need to put a stop loss. They can just let positions run and run and run. So you're not really targeting stop areas with a lot of stop losses, to be honest. Maybe if you're on a crypto coin, like you say, where it's mostly retail traders, yes, there's going to be a lot of liquidity there, a lot of people stop losses, but in FX, like you say, there's just not the big players don't have stop losses there.
Yeah, it's funny. We did a London trading show, the 5ers. We did it, I think, about 2 years ago, and we put loads of guests and things like. There was one guest that had like an institutional background, and he went outside for a cigarette, and obviously me being a little fanboy, I jumped outside as well and just started speaking to him, and he was telling all of these different types of stories. And one of the stories he was saying, because I asked him a little bit about all these stop hunts and stuff, and he gave me a bit of a story, and he said nobody really looks at all of those things, but you know what, if I'm down at the pub and I've got somebody that works in a different firm, I would tell him where I've got a certain client in a certain area, and we see what he does with it, and then he would get a kickback from it. So let's say he's got a client order, because a lot of these traders as well, they get called up, they have to put the orders from their clients into the market. They've got to do it in a really inefficient way, so they know where their client really wants to get out. So basically he was telling his buddy where his client's got like a big order, and then his buddy was getting in where his client was getting out, and then he got a kickback, and that's bad. That's super bad.
Makes sense though.
It makes sense. I don't know how big I don't know how big he was, but these things do happen. But on a if you're looking at Morgan Stanley or Barclays Bank, you think they're going to have stops on their trades? I don't know. I don't think so.
Yeah, no, that's super interesting. I think kind of that kind of idea is what has I for a long time I had this idea that the markets moved the most more towards the second half of the week, like Wednesday, Thursday, Friday. And that's just something that I noticed over time. Mondays, Tuesdays, more range bound. Wednesdays, Thursday, Friday, you start to get more price action, more impulsive price action. And my theory for that was that big institutions would be taking in orders from companies. Maybe Coca-Cola wants to change $100 million into yen, and that's not done in a day. They put the orders in on Mondays and Tuesdays, and then it's maybe filled later in the week, because I don't think banks are taking orders over the weekend unless it's very important. And that's kind of my logic why price action moves later in the week. And so if I'm in a trade, if a trade is setting up on a Wednesday, Thursday, Friday, generally I consider it to be more high probability than a trade setting up on a Monday, Tuesday, because I'm expecting more big institutions to be filling those very large orders and price to be moving a lot more. Obviously that's just an idea, but it kind of aligns with what you said to a little bit.
But yeah, definitely. Let's say if you're a massive institution, you've got to you don't want to get slipped on your order, so you have to break it up. So especially when you've got these double bottoms and stuff, let's say you've got a massive order and it pushes the market up, and then naturally you still want to get that same price. Maybe you put in the same orders at that same level and wait for price to come down, or do something so price does come down, fill in the orders again, and then it shoots off. It's the same thing. I think it's really good having those kind of concepts that you think about how the market works, because it really can help you kind of map it. That's why I quite like when we have ICT traders, because maybe whatever you want to say about like the guy, he's created a framework that actually makes people think, and not just get into the charts and say, okay, price is going up, I'm gonna get long. No, it's like, okay, we've got to map it out. We're going to see what market structure is going to do in different times, when there's the times that are most liquid and the most volatile, and it helps people map out how a market works. That's fantastic if you're a new trader that is got no idea about the markets in the past, you know, and that's why I've got to take my hat off to him, because he's actually helped a lot of new traders coming into this industry and given them a really good foundation. All of the marketing and everything behind that and all the scammy stuff, that's on the side, but having that kind of concept in the market, like perception, is really super important.
Yeah.
Got a question there, mate?
That's an interesting comment. Just before I mention that, I'd just want to add one more thing to what you said. And that framework, it doesn't even matter if it's right. It's just a way of translating what people are seeing in the markets, and you can see that in so many successful businesses, and even in religions. Like, it doesn't matter if it's real or right or wrong. Like, people, it's just a way of understanding life and what's around you. And in trading, these ideas, it doesn't matter if it's right, doesn't matter if ICT works or not. It's just a way of understanding what's going on there. It's just a framework for trading. It's very true.
100%. 100%. Griff, you're actually trading at Trading Center now for the Wyckoff Spring type strategy. That's why it works. You're catching the bottom process, the balls. So this is the same thing. For I'm just a potato, that is a spring. For somebody else, that's a stop hunt. For somebody else, that is fulfilling orders. Or it's like, 2 seconds, Griff. You're going to have to hold the stream for a second, mate.
Yeah, no worries. I have looked into Wyckoff before. I'm just a potato. And that's very surprising that you're talking about Wyckoff, as I've never seen a potato talking about Wyckoff. It is something I've explored to kind of deepen my understanding of liquidity sweeps, because obviously the concept that I've got at the moment, super dumbed down, super simple, and the results I get from it can be quite choppy. Some years it works, some years it doesn't, and I've explored a lot of different ways to kind of make it, to kind of smoothen that equity curve, and Wyckoff is one of them. And it makes sense. It really aligns with the liquidity sweep model, and Wyckoff is old, right? I don't know if it's 100 years old, but it's an old framework, which is fascinating.
Goddamn insurance people trying to ring me up, trying to sell me insurance. Apparently I need to get some more insurance on my motorbike, guys.
Oh, that's not good.
I don't know why.
Hello, everyone.
Hello.
Guess who's in profit? It hit that TP. Oh my God!
Wow. Wait, hold on.
We get a 100% winner today. We're up 1%.
What are you trading? What is it? Oh, you're on the NASDAQ.
Who's Alex?
I traded NASDAQ as one long, and then they got four trades on gold. And viewers of the live stream, that it's now time for me to give it all back. Like, that's literally what I do during the last 2 hours of the live stream. I give it all back. Give it all back for entertaining purposes, I guess. But it's not, it's frustrating, but it is what it is,
It is.
Today, I will not give it back.
I said that yesterday. My trading was absolutely atrocious yesterday. I was looking at gold like this, up, down, sideways. I finished the day yesterday and I sat on my sofa and I was just like, what has happened? What has happened? Because I was up about 3% and then I was down 3% just because of all my trading yesterday. I talked about it today on ABL, but I don't see with that, Griff, you don't have to deal with that, because you don't have to deal with, going into multiple trades every day, because you're not a day trader. You just you find that one trade on the 1 hour, very patient, very relaxed, and you just sit back and let it work, man. I wish I had the patience to be like you.
Honestly, I'm not a super patient person, but I think I've just because this is how I started learning to trade this way, and it's just the way I've done it the last 4 or 5 years. So I just don't even think about it. I'm just used to it now.
You do seem like a patient person, though. That's why, for me, I am the work. Like, even standing in lines, it is awful.
Yeah, okay.
Standing in lines are awful. When I go to the UK, it is really tough for me. When I'm home here, everybody's in the culture of not standing in line. So it's whoever gets there first, and then everybody just argues. and I love it. You know, it's the best.
Are you based in Israel, where the
Yes.
5ers offices are?
Yes.
Well, that's awesome. What's that like?
Very hot, very
Yeah.
warm, great food, really nice beaches.
Oh, I bet.
You've got, you know, the 5ers here.
That's all you need.
There's a
Yeah.
lot of bonuses.
Yeah.
But no, it's great. I love England, but it's cold, it's wet. You get taxed absolutely in every single little.
Yeah.
I will go on a tangent. Honestly, I'll go on a
Yeah.
tangent. because
I would stop you.
England has so much potential, but they are wrecking England right now.
Oh, I know.
And
I know. I'm with you.
I don't know if you watch the Diary of a CEO with
No, of
Stephen
it.
Bartlett. There was
Yeah.
Gary the economist Gary Economist. I can't remember what his name was.
Yeah, I know who you mean.
And there was
Very
another guy that was more a Daniel something that was more of a business guy, and I
Mhm.
couldn't stand the conversation because it was just like taxing really wealthy people is not going to actually help raise the UK up. The government needs to start buying assets. They need to start making money. They can't just be taxed.
Yeah.
See, you got me on a tangent. You got me talking.
I know,
politics.
mate. We could talk about it another time. I'm
Yeah,
with you
man.
on that.
I
100
will-
years ago, there were no taxes. Like they literally started introducing these huge taxes at World War One, and they never brought them back down again. Across in the world, like America went like the Civil War was for 1% or 2% tax, and that wasn't even income tax. It was just on like goods and services. And that's, you know, before that, no tax. It was all from
and
tariffs.
it's all
That's where the
government
government got their
spending
money.
as well. It's like 50% of all them. It's all government spending. It's like I got lots of friends, including my I shouldn't actually say my brother because he'll get into trouble. But there's a couple of my friends that do contracting for you know the councils and governments and things like that in the UK. They get charged double than what
Yeah.
somebody else would. They get charged double and taxed, and you know. They're just draining money. That's why I look at what's going on in the US now with what Doge is trying to do.
Yeah,
You
it's
know,
brilliant.
trying to cut down government spending is fantastic.
Yeah. But
Trying to
it's-
get assets instead of taking it from the people that are, you know, working really hard. You know, you
Mhm.
get taxed when you buy, you get taxed when you sell, you get taxed in the UK when you die.
Yeah. You can't live, and it's so annoying because there's so few countries where that isn't the case. You don't have a lot of choice if you want to kind of live a non-taxed life.
I know, yeah. Go to Dubai, but the Dubai in the summer, I promise you, would melt any English
Yeah.
person. They would just
Yeah.
be like an ice cream on the pavement, just like melting. It's super, super hot, like 40, 50 degrees hot.
Yeah, there's not a lot of choice. Hopefully, times change. We'll see.
A lot can happen in 4 years, Griff.
Yeah.
Okay, so some interesting statistics here.
We gotta go back. We gotta go back to day trading now. God, that's
Yeah.
got me riled up, man. That's why we can't talk about these things. It gets me too
Revolution.
riled up. Yeah. Revolution.
All right, so this month, whenever NASDAQ, so trading in the direction of the 15-minute candle on New York Open and NASDAQ has a 75% win rate.
Ooh.
During when there's no news, so basically no news 1 hour before the open and 1 hour after open, it's an 85.7% win rate with an average R of 3. That's this month, right? Now, this month has been good, but there's some serious edge in playing based on a momentum of the New York Open.
There was I think it was a few last year. I wanted a back test on what day did the Monday high or low get taken out. So it was always, and I think it was like I found it like 50 or 60, 55% or 60% that it got taken out on a Tuesday, one side. And those little bits of information super important. So if you haven't done that stuff and just going back and just testing out little ideas of like, how many times does price come back to a weekly open? I don't know. Or how many times does price take out a prior day, then comes back into the range and then goes and takes out the prior high? I don't know. All of these little things, and just start stacking up all of these little stats, and suddenly you've got yourself a playbook of just different ways. And all the technical things of like getting into trades, all it is just a break, retest, continuation. All the rest of that is just, you've got nothing else to do. It's just get in the trade. But the stats help you like map out the market, that it just, you know, just make it super simple to
Find
get
those
in.
pair characteristics. I've got a process that I do for that. I call it focused charting. And I basically just take all the indicators, well, you know, the few indicators I've got on my chart, I take them off and I ask a question. For example, what happens after we get a large wick on AU? And I'll just go through like maybe a few years of price action. I'll circle all the wicks and I'll write down what happened. Did we continue? Did we range? Did we reverse? And then I can see, based on the data over 2 years or 1 year, on AU, you know, 70% of the time, large wick, we go in the opposite direction. 30% of the time, you know, and then I just do that. Like that's pretty much what I do now, because there's only so much backtesting you can do. And by doing that, you just find all these pair characteristics and you get, it's like superpowers. It's like a little cheat. You've got all these little stats in the back of your mind. I think that's well worth doing if you've backtested your strategy as much as you can. Yeah, it's interesting you do the same. We all meet the same conclusions.
That's the homework that I think, because after, there's only so much technical analysis that you can actually learn. And once you've learned the technical analysis, Jonatan knows this. He's doing a whole CMT. He's learning it from, you know, the expert way, and he will tell you that there's only so much you can learn. The rest is either learning about yourself and trying to keep the money that you make and trying not to be in between, and you know, the stats of the asset that you're trading, or the seasonality on different assets, if that's like coffee or orange juice or any kinds of different things. So yeah,
I think seasonality is also part of technical analysis, but it's just like I say, you know, we have the candlestick, Japanese candlestick. It gives us all the information we need with the highs and the lows, and it gives us all of that in a very visual way. And then all we have is, you know, we have that, and then we have trends, and we have volume. That's everything there is in trading. There's nothing else. Everything you see is price and volume, or both. You could do like all the indicators out there. Is less, you know, an EMA, that's price. VWAP, that's, you know, EMA with volume, basically. Like, it's just price or volume, or the both. It's just, you can't, it's all it is. Yeah. Just different ways that, you know, as well, like people say about indicators, you know, your candlesticks are indicators as well, you know. It is an indicator. So, but there are like indicators are a very good way of visually, I mean, I guess the best use case for indicators is algorithmic trading, because it, as you know, as traders, we can look at a chart and we can say, oh, this is a breakout, but how do you quantify that, right? Well, you can quantify that by looking at like OPV, ADX, and perhaps MACD and things like that, or the ATR.
Actually, round numbers.
And it creates signals for. It's easy to quantify trading with indicators, but if you're good at I mean, I know that all of us, you Griff, you Alex, and me, we can trade. Like, if we want to, we can remove everything from the screen and we can trade price action. I mean, we understand that a breakout is a breakout. We understand that a retest is a retest. We understand that when price hits a support level, we don't want to be selling, you know, we want to be buying. And as long as you understand that, you're able to basically trade any markets, because all tradable markets, and fun fact is, even untradable markets will have trends. I mean, if you're ever on a diet and you track your weight, you're gonna have a trend. You're gonna have higher highs and higher lows.
Higher highs and higher lows with my diet at the moment.
Yeah, exactly. But it's there. Like, it's just the you know, the natural flow of nature to move in a cyclic manner, like in cycles.
Yeah.
It's just the way the universe
Same with your
works.
behavior patterns as well. Have you ever
Yeah.
know? I keep doing this observation. You know, when you've got like in your bank balance, let's say you're trying to save a certain amount and you get to the top of that saving and suddenly you just start spending and spending and spending, and then it comes back down to that area where you say, oh my God, my bank balance now is really low. Now I've got to be really
That's your
just
problem.
oscillates
Alex.
from up and down, oscillates from the place where you have to be really stingy to the place like, oh my God, I've got so much money now, I'm just going to start spending. It just goes up.
Have you ever
and
thought
down.
about talking with a financial advisor, Alex?
Do you know what? I am a bit of a
Talking
spender.
to a professional about this, because this is not the right place to you obviously have spending problems. Gotta take care of
You
that.
can't say anything. If anybody has seen
You
what
guys.
your office has got in here, all the gadgets.
But I know that I have a problem. That's the difference. You don't
Oh,
know
no.
yet that you have a problem. Like,
Have you ever noticed that you're just buying random stuff on something like AliExpress or just randomly ever? See, that's my.
You
that's
know,
my
I
little
had
thing,
a-
you know? Sometimes I'm just doing those little things, just having a little bit of a spend. You know.
I had a phone call from my bank once, and they called me. And they're like, "Hi, we're calling from blah blah security center. We've locked all your cards because we see suspicious buying." And I'm like, "That's me. That's yep, that's me."
Like, have you ever?
So we see all of these orders on Amazon and Alibaba. I'm like, "Yep, I know, man. I got a problem. Activate those cards. I'm not done."
I was trying to speak to an accountant about doing stuff with crypto, trying to get my crypto.
Don't say any words about it. Really
I'm
banned
saying
here on
fine.
the stream.
But remember the coin that you told me to buy, that meme coin? It's like, how do I
Yeah.
explain to somebody that I've taken money out of something and I've put it into these questionable memes? And they're asking, okay, I've got to prove that I've done that. And it's like, then you pull up the meme and stuff, and it's something very questionable. It's very
You know, this comment here, Ali, it's actually somewhat true, because I do have backups, okay? I do have backups.
That's funny.
Yeah.
Hey
you know
guys,
the
I better
first time
shoot
we
off
actually-
now.
the first time we actually did that, it was the
All right,
funniest
Griff,
thing. Somebody's done
Alex,
it so
you
good,
just,
so-
we gotta let him go, man. Gotta let him go. Time's up.
Thanks for having me.
It's a
Yeah,
sad
Griff.
day.
It's been great.
Bye,
It's been
Griff.
great having you on.
Bye, bye.
I'm
I've been
sorry,
listening
Alex.
to the,
later, bro.
I'll leave you with the boys.
Thanks, man.
Oh, take care, man.
Good to see you guys. Thank you. See you next week.
See you
Yeah,
later.
It's always great to
Bye-bye.
have you, Griff.
Thanks,
Bye-bye.
guys. Bye bye.
I love
Man,
that
I
man.
got this bad
He's an
headache.
amazing trader.
I think my back is just all screwed up from. I would like to say like something exciting, but it's just sitting in the chair watching a screen. I think I
That
think
can
I
be
got
exciting. That can be exciting.
No, it can't. Like,
If you're
really,
trading,
is it
No.
really that exciting? We're sitting here. Just what is exciting though is back testing a system that you believe in and it shows good results. That is incredibly.
That's the most
Exciting.
boring thing I've ever done. I hate backtesting, and it's disgusting.
So why you're not
I think you
profitable,
should-
Alex?
Oh, don't say that, man. No. Sticks and stones, mate. Sticks and stones.
The thing with discretionary trading though is
Insurance guys ringing me back.
it's always a
market
debate
makers.
whether you know how profitable you can be without using backtesting, without having go deep into data. It's always a debate, right? And I think it's very interesting to talk about it, because typically, or not typically, a lot of people don't like doing backtesting. What Alex is just showing is probably at least half of everyone who watching this says, I don't, yeah, backtesting is nice, it's useful. I don't have time for that, or any preference, or I don't want to do it, desire to do it. But by not doing backtesting, you're not tapping into one of the great sources of edge, right? You can be profitable without it, but it's more difficult. You got to be so good that you're profitable without the data. With the data, it's already hard. Imagine without the data. So it's always interesting. Not interesting. I think it's very doing a favor to the community to talk about this from time to time, right? The importance of having data and taking the time, even if you don't like it, to appreciate that this is one of the ways you can increase your edge if you already have one. And if you don't have one, this is the way to get edge in the market. It's by doing backtesting, trying different things. Most of them will not work, but in between, you will find one or two things that either puts you into profitable space or is going to add, you're going to be losing less. In any ways, it's going to improve your whatever performance you're already having.
Oh, look at that trend line. Oh, it's beautiful, mate. Absolutely beautiful. Can't hear you, mate.
So gold is
breaking out.
Yeah, with a good move to the upside here on gold on low time frames. We got NAS in a possible buying structure here as well. If I can switch over to my screen here, we got a nice 5-minute candle here on NASDAQ. We have the
I'm gonna see you later, guys.
Yeah, all right, man.
Love you both.
Thank you, Alex.
See you tomorrow,
guys. See you guys later.
Take care.
Wow.
Okay, so I'm gonna switch. I'm gonna switch over to your screen, Victor. I'm gonna be logging into the Hypergrowth account to take a trade on NAS.
In the meantime, yes. Sorry to interrupt. Go ahead.
No, go ahead.
Well, in the meantime, I was talking about this morning when I came in, or it was morning anymore, but when I came in, that gold is reaching, and it's this area to me is the area that's going to tell us either today and probably for the coming a day or two in what direction we're going to be going. Right, this is the area. If prices, we're gonna know by price respecting or not, or reversing from this area. We're gonna know if we're gonna have a continuation of this trend that we have been, this market structure we have been seeing so far, or we're gonna get, is this going to be, we're gonna continue to the downside, or we're gonna break this structure and eventually bring this swing point and continue going higher. Continuing the longer term, the daily uptrend that we've been seeing. So I think this area is very pivotal for the coming days, and maybe at least this is the first test. Depending on what happens with this area, it's gonna switch, and that's why it's pivotal. It's gonna switch my expectation. Are we going higher or are we going lower? And I think that's a very effective way to simplify your analysis and your direction, your bias in the market, right? Letting it be based on price action, not your what foot you put first out of bed this morning, but what the price action, what the structures are actually telling us. To me, this is the area that would be where the sellers come in if we were to continue lower. It doesn't happen all the time. It's not a guarantee, but that's the test. So it's very interesting to see how what it's doing. We're really just scratching that structure. And if we go to the H2, there isn't anything there yet. It's still bullish. If we zoom in on the candles, you can see that the buyers are still in control. Right, looking at those bullish order structures that are being created and respected. That this is the H2. See that order block being created and respected. Buyers are still in control. If you go to the lower time frame, you see that yes, there is also an order block that was respected on the daily on the H1. But now we find one possible area we might see price. This is another test on another level, right? This is the H1. So the test that I just mentioned is the test on the H2, right? The test being this area, the price doesn't close above it and reverses first. That's the first test. But if we go to the H1, we now get a a structure here. It may not be the structure. Price might still break it, likely to break it, because we are in an uptrend. It's only an H1. But somewhere, some moment during now and the end of the day, and may even take a day longer, more than a day. Maybe it's gonna still be here tomorrow. As long as it doesn't break it, the test is still open to tell us whether price is breaking down or continuing higher. So it's very interesting, at a very interesting place. And here, as long as the price is here, basically, the jury is still out. We market is not telling us what it wants to do next.
I just closed a quick trade on NASDAQ. I'll show it to a quick scalp long here. So I entered on, as I said, this breakout right here. So I entered on this breakout, and then I sold when it hit that small. So as you can see on the history here, I made $17 on that quick little move. So we are now up over 1% on the day on the account. So we're slowly but surely making our way back towards the break even. This might actually be a 100% win rate day. Let's see. Wow. I'm gonna try not to take too many trades here today, but I'm slowly but surely just trying to find the momentum, basically. If I see
the momentum in your equity curve, or the momentum in price,
in the market, in price. Okay. If I see, so you can see here, for example, this is a good example of price getting above this level, and you're showing and the beauty of NASDAQ is we don't have to pay any commission, so I can make money in a very, very small move. Almost feels like cheating,
And what does feel like cheating?
Trading without commissions.
Okay. But when there's no commission, then they charge it in the spread. The broker has to win one way or the other.
Yeah, but the spread is so tight, so it's still such a tight spread.
Yeah. You cannot have none of them, right? It's either a combination of the two or one of the two. It's either.
Yeah, but the spread on NASDAQ, looking at the structure, if you compare the spread with the structure, the spread on NASDAQ and gold is very similar. Okay, NASDAQ might have a slightly wider spread, but that is just slightly. If you look at the 1 minute bars, it's very, very, very similar. But gold has commissions.
You can,
so that's what I.
Yeah, you can express it in percentage of, let's say, the daily ATR, or maybe the 1 hour ATR, something like that. That gives it, puts it in perspective, like how much is the spread compared to different assets, comparing it with a volume based, range based manner. That you're comparing apples to apples.
So it's gonna run just one minute.
Sure, no problem. We're gonna be all right. So let's look at it. Let's check the chat to see if we have anything, anyone, any requests. I think we had Eurocat still pending to do. If that's, let me change the layout. Yes, Eurocat, and I believe a couple of others like dollar yen, and some other more. Are those? Do you guys still want me to go through those pairs, or do you guys want me to analyze something else, or maybe we can discuss anything you want? You have me at your disposal together with Jonatan, so make use of it. There is we have been in the market for quite some time. We had our share of losses and struggles, but we're profitable, and so we've in order to get here, we made a lot of mistakes, and you can learn from our mistakes and learn everything we learned along the way. I share them generously with anyone who's willing to hear. So, but in the meantime, hit the like button. Make this channel, if you enjoyed this channel, if you're watching, you likely enjoyed the content, right? If you enjoy the content, be a good person. Hit the like button, because if you do that, the algorithm that decides what video and stream is suggested to the next person. So if the next person watching, whoever and wherever that person might be, the more like we get, the more person are being suggested to see this. So if you think this is a great channel for you, then be a good person and hit the like button, helping another human being around the world who might be, needing a helping hand in their trading journey. All right.
Why is there different candles between brokers? It's just maybe you have a good answer to this.
Well, it depends on the underlying asset, because it depends on the instrument. As you know, the brokers forex compared to other instruments like indices, it depends on what is it that they are. CFDs, which is what we trade, is a derivative, right? It's a derivative of something else, right? So when you derive the price of that other source, it depends on how that mechanism works. And some brokers, it depends also in forex, it depends on how many liquidity providers you have, because as we know, forex isn't centralized. So if you have let's say a different distribution or a different set of liquidity provider one broker has, there could be a liquidity provider offering a different price, and that liquidity provider, if it's not in, let's make it simple, if you have two brokers, A and B, and you have a liquidity provider that is only on A and not on B, and that liquidity provider is posting a better offer, but it's only doing it there because it's not centralized, that could affect the price, because of course you will have a difference in price. The liquidity provider is only one side at one broker. That is one reason. And in other instances, like you say with indices, it depends on what is the underlying instrument asset. It could be a future, it can be a perpetual future, it can be different things, and that's where you have, because of those underlying assets may not have the exact price, right? If you use a different future, you'll have a different price. That can also explain the difference in price. And of course, you have latency, and commission and spread being that liquidity provider again. But those are the things that typically make it a different. And with forex and CFDs, the thing is, it's not centralized. Right? If it were centralized, then you'll see the same price everywhere. That's when you're trading stocks, for example. That's a centralized exchange. Every bid and offer is visible in this one centralized place where everything comes together. There, you should not see any difference. But we are trading CFDs, which are not centralized, and that's the reason.
All right. Okay. So now looking at the NASDAQ, I don't think I'm going to be trading this account anymore today. So what I'm going to do is I'm going to go and I'm going to just log into the hypergrowth valuation.
Do we have sound? I don't hear it. Do we have music?
What sound? You music? Yeah, we have music.
But I don't hear anything.
Weird.
Is it me?
Yeah, it's you. I think so. Should have music.
I know it's selected and everything, but I don't hear it.
Yeah, I do hear it. Let us know in the comments, guys, if you hear it. Okay, so we're up on the account here. We're up, what is it? 0.25%, I believe. And we're going to be, I'm going to be trading based on the New York Open.
Now I do. Did I change anything?
Nope.
Okay, perfect.
Okay, we have a question for me here. Don't you think it's a manipulative green consecutive? I like it. It makes seem like we're personifying
price, as in
Yeah.
it has intention and it wants to get you. You know, it's coming after you. Last time you did it bad, so now it needs to get back at you.
Yeah,
like
that's manipulative green consecutive candles in a row. Okay, so how can price candles be manipulative? That's my question to you. What does that mean?
I understand. I understand what he's coming from. It's apparently the candles, the fact that they are green consecutive candles is telling him something, at least for him. You know, is conducive or inducing him to do something. Is pushing his buttons to either go long or go short, whatever it is that this viewer is reading into the market. I think that's what he means. But I think it's a good thing. Yes, the market sometimes it feels like it's after us, that it's trapping us. It does. Makes you think one way and it goes the other way. So the market, I understand that, and that's why we talk about manipulation a lot. And it's something real because we feel it. We feel manipulated, right? That the market tricked us into doing things, and it does that. However, it's fine to see it in those terms, but in the end, price is just price. Price doesn't care about you. So
yeah, it's the market is timeless. The market does not move in candles. Candles are just one way of us looking at price.
That's true. That too. So I think it's a good thing to be aware of not putting too much. I know it's almost like you're dealing with someone else, right? When you're thinking, it's trying to get me. It has an intention. It's I'm gonna get back at the market. If you continue to follow that trend of thought, what will happen is you will get revenge at the market, right? You will revenge trade, and we all know how that ends. So it's better not to, label or think too much in those terms, even though, yes, the market tricks us all the time and it traps us. And that can also be an edge, right? Recognizing where others are trapped so you can take advantage of that. But, be aware that the market doesn't care about our stops.
And I also feel like the forces that has the possibility of moving in the markets are not the same forces that creates consecutive green candles on the lower time frames. It's not like we have people out there. It's not like we have people out there saying like, okay, let's create 5 green candles just to push the market lower.
Exactly.
And then on what time frame, it's.
Yes, that's exactly true. We think, and it's obvious because we can only see things from our eyes, right? We're one person, and it's logical that this body and these eyes and our senses are the way we interact with reality, right? I'm not gonna go too philosophical on this, but it's logical to see things through our perspective, from what the market is doing to us, right? If we open a position, it's going against us, or it's giving us something, it's rewarding. But in reality, the market doesn't care about you. It's not about you. It's not about me. It's not about anyone. The market does whatever it's going to do. It's either you recognize that and read it and you go along, or you get crushed in its path. That's the true reality of how the market works. So I know it's tempting to think in terms of me against the market, but in reality it's not. That's not the proper way to put things into perspective. That's not the proper perspective to put yourself in.
What's interesting is the banks they don't have to have strategies to take our money when we have people thinking this way, because if you think that the markets are after you or the markets owe you something, then the people that understand that is not the case, they are far ahead and are able to win just with the idea of following the flow of the market, right? So if there's someone out there saying like, okay, we got 5 consecutive candles here, this must be a manipulative move and the market must move to the downside, then you have people trading volatility and momentum saying, oh great, we have a big move to the upside, let's follow that move, you know. Let's follow that volatility, let's follow that momentum. But yeah, it's the success rate in trading is low because people, I believe, they don't really know what trading is. They don't really know what these markets are. It's like you get into the market and you think there's some magical thing, you know, there's this magical market makers that are controlling the market and is hunting for your stop loss, and they're trying to manipulate time and space to take your $50. That is not how it works. The markets move because of the simple idea of supply and demand. And we have millions and millions and millions of people interacting with the markets on a daily basis, and everyone buys and sells based on what they believe is the asset is valued at that time, if it's undervalued or overvalued. And the big players and the institutions, they know this, and they follow the flow of the market. Basically, that's basically it, you know.
Yes, indeed. And I would like to show something on the charts, if I may. We were talking about this trade that I took on GU, and it was something I discussed on the workshop on Discord yesterday, while it was happening before or maybe after. I don't remember exactly when I entered this trade. And the initial structure, or the completion of the structure, that reversal structure, that's to me will be the most logical place to put my TP, right? Because if the market is reversing, that is the area that we're going to be targeting, which is this high. However, the most conservative TP is, of course, before a relevant structure, which in this case would be the H1. And you can see, and this is the reason why, and the market can still reach the target. I don't mean to say that this is everything we've done. This is it. I don't mean to say that, but let me go in a lower time frame, and you will see that once we get before we tap into this order block. Let me see if I can zoom in so you guys can see it. I'll make it even bigger. We can see the reaction from the market. As soon as it taps into that order block, right? I don't know. There's no way to know in advance how strong this leg is going to be. Is it going to be just a retrace in its path going higher and hitting that higher TP? Or is this going to be the beginning of a reversal, right? We don't know that in advance, right? So is this, let me put the quasi here. You can actually also see the quasi, see how the market, I don't know if it's going to break it or not. That's unknown, that nobody knows in advance. And if you look at another time frame, perhaps the 15-minute, no, actually, let me put it at 5 still. Look at this quasi as well. So there are different, places you can see them. It did break structure. Is this going to be all it breaks and then just continue to go higher, or are we going to see a much lower price? We don't know that in advance. That's something unknown. However, what we can know in advance is where price is likely to have such a reversal or pullback, and you want to have your TP, and that's why I said this at the beginning of the stream, that you want to have your TP in front of such a structure, because in case this is a reversal, actually it's going to reverse and continue to the downside, you're already out. You're getting out at the right before you front run that reversal, and you get out before the structure. In this case, it actually went to the let me zoom in. You can see it went a little bit above it. Look at this wick. beautiful. Let's measure it, how much it is. Basically 2 pipettes. 2 pipettes. As you can see, it's not coincidence that it changes direction right after getting into that area, right? That's simple order blocks, nothing too fancy, engulfing outside bars and making sense of it all in using top-down analysis. I just wanted to share that. I think that's I think this is, to me, this is, I enjoy watching this, how price moves and price action respects those structures. It's telling us something. It's talking to us.
Yeah, definitely. There's a story being told in price action, and we have to listen and observe and be. I think one of the most important things as a trader is to actually be available when the things we want to see is happening. We're going to be listening and observing to see what price action is telling us, and then whatever is telling us, we need to be available. Okay, so we got the New York Open right here. I'm going to be placing a trade in based on this 15-minute candle. So I'm going to show you just quickly my screen here before we can go back to your screen, Victor.
Go ahead.
So right now we have a current 15-minute candle right here, and we just zoom out here. This is the trade I took yesterday. Or was that a one? I think that was a 1 hour trade. Now zooming out here, we might want to get some context here. We have on the daily, we have a breakout of this area. On the 4 hour, we have a low time frame breakout here with a strong preceding move. We have on the 1 hour a good breakout move, strong bullish momentum here. And then on the 50-minute, and this is the one that I'm going to be trading based on, it looks bullish. Now there is the chance that we might retest this level, but I think that retest might have just happened on this price action. So we'll see what we have here. Let's go into the settings here to see if we have any news events. We have no news events now. So yeah, I'm going to be placing a trade based on this 50-minute candle. So I'm just going to be monitoring this 50-minute candle here, and then feel free to share your analysis, Victor, while I do that.
You're getting you're setting some settings, you said?
No, I'm just going to be observing this 50-minute candle to see, then trade based on that one.
You're going to be observing in pure silence.
Yeah, so it's gonna be sitting here. I have quite a bad headache, so I'm just gonna be relaxing.
No problem. So let's see. We can actually. Actually, people in the chat before I took my break, there were a couple of requests. Do you guys still want me to go through those pairs? Because I don't mind doing them. I can do them all day, any pair, anytime, anywhere, any place. But I want to do things that you guys want us to look at. So let us know in the chat if you guys want me to do Euro CAD, dollar yen still, or put out some other requests. Are you in the? I think Hamid was asking for Euro CAD. Hamid, are you still with us? If you are, let us know in the chat. And everyone else, even if you don't have a request, don't forget to hit the like button. The like button is there for a reason, and the like button is, gets love from you when you click it. So go ahead, love the like button, and subscribe to our channel if you're not a subscriber yet.
That's a good one.
We're increasing.
Love the like.
We are increasing. Our channel is growing exponentially. Every day we're breaking records day after day, and that's all thanks to you. You want to see that keep on happening, us becoming bigger and bigger, and you with us, because we're a community. Don't forget, click the button, give it some love, and we will be keeping on this trajectory to becoming the place for all traders around the world to hone their skills in trading and get those goals: financial freedom, time freedom, and all those good stuff that trading brings to us. All right, let's check the chat. I see dollar yen, someone asking pound dollar, and euro dollar as well. Euro cat I don't see, but if someone asks, if Hamid or anyone else asks, I'll gladly do that as well. So let's do I can do let's see, I can do dollar yen, since we did pound dollar earlier, and I want to give you guys as much of value as possible. Okay, so let's do dollar yen. I'm gonna do the analysis. As we always do, we start from the highest time frame. It's not the highest. There's always a higher time frame, but the highest we use typically. All right, so that's going to be. So what do we see right now? Right, that's the first thing. I start with a current candle, and I go backwards. What are the order blocks that have been created? Have they been respected? Are we retesting them? How many bars between they have been created and this retest that I mentioning? All these things, the answer to these questions tell you something about price, right? Its intention, where it is it trying to reverse? Is it succeeding at it, etc.? All right, so what we have is if we go back, we can see, of course, a monthly order block that is currently being retested. However, by the size of these wicks, it tells us that this order block isn't that effective in holding price. So it's not that relevant for price as much, right? It can do its thing, but it doesn't seem to be containing price that nicely. So if that's a sign that order block is not as attractive for us as traders. So that means that we have a order block below us and another one above us that has already been retested and successfully so. If we count the number of bars in between, was created a bearish structure created above 1, 4, 6, or actually on the fifth one, it got back to that order block. Took two order blocks, two candles to reverse from it, and it did so successfully. So we're understanding that we've successfully retested the bearish structure and are likely to be going into a similar time frame structure in the opposite direction, meaning a bullish monthly, and we already did that by reaching this order block. The fact that we are wicking it as much tells me that it's not a great order block, so I'm going to typically I'll move it aside because of just what I mentioned. Let's go deeper on the weekly. So what do we see? We understand now by just what I mentioned that the market left this order block, right, the higher time frame order block, and it went to the weekly. We already reached target, and possibly we're going to need to go to the lower one, because as I said, the first bullish one is having difficulty reversing price or containing its power, so to say. All right, so but on the weekly time frame, what do we see? We have a break of structure, this being the quasi. See that break of structure, and price is likely to go up if it comes up to any structure of relevance in its way down, right? That's how the market a lot of the times, not always, behaves. Let's mark this swing low and see, do we have something here? Actually, we do. So we have a new entry order block on the weekly. See that? It's a very wide one, so it's not very interesting for us. But I would expect we have two reasons for price to use, two structure for price to use to go lower. Right? So I'm going to take this out there. We have a fresh order block on the weekly, which is this one being retested. That on its own is already enough for price to use to go lower, right? But we also have a quasi entry order block, which is part of this bigger quasi, which is based on the monthly order block being rejected or successfully retested, that can also work. So we have two reasons for price to either do the the reversal from the lower, from this order block or the higher one, whichever does it. It's fine. Of course, it's not a guarantee. It can just continue and break it and invalidate it. But we understand that we are above us. We have two separate, for different reasons, structures that could initiate a selling pressure coming to the market. Okay, so we understand that. We are currently, so if the daily time frame starts having quasis or bearish order flow, then we have weekly alignment. That means that we can target some structure below us complete. So this is the potential if whenever we get the alignment in the daily and the confirmation of the weekly as well. Okay, so that's one possibility. Let's go to the daily and see what we have. Okay, so the daily is showing us a bullish reversal, and the taking out of this order, this neckline, this is the daily neckline, right? If it takes this, the daily is telling us that it's trying to go higher. Okay, hasn't done it yet, so we can still wait for that. Anything else it says? Not really. So there's a bullish structure here in progress, but it hasn't been validated. It hasn't been activated yet, so we can't act upon it. It hasn't been confirmed yet. Okay, what else? This is gone. We do have an order block here that's been retested already on the daily, but this one is not fresh anymore. It's not as strong, so that's why I don't have it there. And it's already been retested. This look at this, that movement, that's the first retest. And that first retest has been completed. The market did its thing. It reacted from it. So, the second retest is typically the order block is already weaker, and that's why it goes higher in the process, and, could possibly break it, but we'll have to see if price actually is going to break it. But there isn't anything in it. Actually, we could make it smaller because it's not very relevant right now. What else do we see? Bullish are basically, if we go read what's happening here, the buyers are still in control. Everything that we see in price action in this leg is bullish. We have bullish structures being created, right, and being respected. And we have bearish structures being created and not being respected. Both of those things are phenomenon or behavior of price is telling us that buyers are in control, and we could, until that changes, and it hasn't changed yet, we should expect price to continue higher, right? That's the whole principle of trend and momentum. Okay, so what else do we see? Let's go to the lower time frames. So we don't have a reason here to go short or long on the daily in terms of order blocks. Just the momentum and the market structure is bullish because of this this move. Let's go to the lower time frame, the H4. Do we have break of structure or anything in that sense? Let's see. All right. There is that bullish quasi that we were using, or the market formed earlier. Let's see if that's a thing. Because the weekly, remember, the weekly we are in a supply zone, but the daily isn't showing us, isn't aligned yet. So it doesn't make sense for us to look for sell signals necessarily based on that weekly, because the daily has to be aligned, right? That's not the case yet. So and the daily isn't give us any signal necessarily in terms of order block. So we need to, basically we don't have a signal on the daily. And on the H4, we look at it not considering the weekly and not considering the daily, because none of them are giving us anything in terms of signals. what the H4 is telling us is that there has been a nice a nice reversal pattern, right? Which is this breaking of that neckline. This has to be a little higher, of course. Breaking of that neckline and comes back to that order block and moves away. And remember, we talked about this yesterday, or maybe I did it in Discord. The market comes back for a second right shoulder. Sometimes it does come back to this same order block as it moves out. In this case, it didn't. It did come to another order block, and actually it invalidated before continuing. To me, the structure already was completed here. And if the market didn't complete it there, then for sure it completed on the second time around. So this H4 quasi isn't, it did its job. It almost completed it's already completed, I should say, twice. So expecting it to reach the daily is a bit of, asking too much of it. That's it. I don't see anything else. The only order block that is left is this one. It might come back to it, but on the third time, that's already too big of a structure for an H4. So I don't have anything on the H4 below here. What we can say, though, is there is an H4 quasi bearish, which it has a signal. I see that now. So we do have a reversal here. See the quasi? Market does this all the time on both sides. Right, so you got to be flexible visually with what you're seeing, and it comes back to that order block, right? I mean, isn't that beautiful? Isn't this beautiful? Look at this order block here. Entry order block. I find this so beautiful. I don't know. I'm the only one, but I don't think I am.
Not the only one.
This is so beautiful. Look at the quasi. Let me close this up.
I have an open trade, by the way,
right?
on NAS based on the 50-minute candle close. I just want to show you guys quickly here. Now, I got to be honest though. The statistics are telling me to do this, but
hold on. I'm gonna show your
price action is not. Price action is not telling me to short this because we have a retest right here, but the statistics are telling me that if the first 15-minute candle is bearish, there is a very high likelihood of the next candle closing bearishly as well. And from what I've seen, a 1-to-1 risk to reward ratio is the most favorable exit point if I put the stop loss above the high of the candle I entered based on. But looking at price action, this is a retest of support. So I'm following the system here, but it's very, very difficult to do so in this situation. I've seen though throughout the testing that it actually, 75% is good. That's the statistics that I do not want to fade, but I have also in the back testing, I have not, one thing I've tracked is news, and I've tracked some EMAs, but I have not tracked the horizontal levels. So this might be a losing trade, and I will go back and I will add one thing to track. I will go back, look at all the trades, and I will track if it's a break and retest of its support, does the chance of shorting and winning that trade is a lower probability, which in theory and logically it would, but the idea is based on trading with the momentum of the open. And you can see here, right now, we see that momentum in action. We'll see. Thank you, Vinicius. I am in profit, yes, and I'm up 0.25%. And if this hits TP, I'll be up 0.5%. Reaching the low of the session here. The momentum is obviously all over the place, but quite bearish is what we're seeing right now. Let's look at what the risk to reward is of that. I think I can actually increase it a little bit. Yeah, 1-to-1 is actually here. You know what? I'm just going to close this trade. I know I'm supposed to be following the system and everything, but I mean, look at that retest. It's too good. I can't be shorting that support. I got to go back to back testing and be a little bit more, get more confidence in this. But I cannot short the NASDAQ in an uptrend on support. It goes against every fiber of my body. Okay, so I closed that one. Up $25 on that one. I could look at all history. Yesterday, $57. Today, $25. Okay, so the thing is, today, guys, and this is my last trade of the day. We got a 100% win rate trade. We got 6 trades. We got 4 on. I believe we have 6 or 7 trades. 4 on gold, 1 or 2 on NASDAQ, and now another one on NASDAQ. Very good trading day today. Very, very good trading day today.
You are the best trader in the world, Jonatan.
Yeah, it sure feels like it, you know. And then and then that confidence gets you. Look at the volatility, though. I could have kept that trade open. There is, yeah, man. There's something to this. Definitely something to this. But it's only 1 trade a day on this account. There's only going to be 1 trade a day.
Potato says you are doing right, following your gut. That's from Potato. Potato is telling you, follow your gut.
Yeah, I like that. That's a perfect name for that comment. I think in this case, yes. And as this will be something that I will be trading manually, I also... Yeah, but then look at this. It continues down. If you look at the 1 minute, it's what I see here is a lot of indecision, lots of volatility, lots of indecision, and when you get this type of price action on support, it isn't a news-driven move, right? It's not a move where it's like the whole market decides that we have bearish fundamentals, we're going down. This is a move where there's strong forces on both sides and there's indecision. And in this case, when you have something like this, then the underlying trend takes control, which is bullish in this case. So I would believe that NASDAQ is going to close bullishly on the day unless something happens fundamentally.
So you're going to hold it through the close?
No, I closed the trade. The trade is closed.
Okay. Yes, I understand that.
Look at 0.12%. Okay, Victor, I gotta take a break. I got a massive headache. I gotta go lay down. We got Ashley is supposed to be joining us in 8 minutes or so, and I'm gonna take a break. I'm gonna count my money and lay down. There's nothing like, you know, smelling that fresh cash to relieve a headache.
You're gonna be counting money as Uncle Scrooge.
Yeah, exactly. I'm gonna be swimming in gold. Okay, guys. I will see you all. I will see you all tomorrow, and I'll be watching the live stream from the couch. I'm gonna get some water, and yeah. All right.
Take care, Jonatan.
Yeah.
See you later, tomorrow, whenever. Take care, man. Bye-bye.
That's it. Take care, guys. Bye.
All right. So as we were talking about, and as we're anxiously waiting for Ashley to come by and bless us with his presence, let's see what we can, what I was talking about. So what we were seeing is that the market, what I was going to say was that the market is I've mentioned this in the past, but I keep mentioning because, of course, there are other people in the audiences. It's not the same people watching us all the time. But even so, I'm going to repeat it because it's so true and it takes time for it to sink in. While the market creates structures on both sides at the same time, and it takes turns on which structure is going to react on and which one is the dominant one. Okay, but Ashley is coming in. I see in the background. Take your time, Ashley. Take your time. No worries. Whenever you're ready, just let me know. Take your time. So the market creates those structures on both at the same time in both direction, right? And opposing direction. It sounds weird because if it's a bullish reversal, why is it creating bearish structures? But it's at the same time, and you gotta. It's sort of it has a certain rhythm to it, right? It does one, it pushes up, it has that ebb and flow kind of rhythm to it. If you remember, we just created, or I was talking about this. I'm gonna change the color so that you don't get confused. So we have the bullish structure, bullish reversal here, right? It's a smaller one, but it's the same time frame, right? It breaks it, goes all the way up. Actually, it went here first and then came back into that order block, right? So this is the first reversal. I'm gonna change the color to something. Let's see. Let's change this to yellow. Well, maybe something bright. Yeah, well, maybe yellow not. What color would be fine? Yes, I think this blue perhaps is better. Is it? Maybe I'll make it a little bit thicker. How do I change this? There. All right. So the purple structure, that's the bullish reversal. This is all the same time frame. And while we have, while it creates and completes one structure, it has already created the beginnings of another structure, which is the bearish one, right? One is with a trend, the other one is against it, but still, it doesn't really matter. The market creates those reversal patterns, and as it creates and completes one, it gets into, at the same time, right? It gets into the other one. This is the bullish reversal, so I'm gonna take this out. This is the bearish one, sorry. And you can see how this is the uptrend, established uptrend. There, established uptrend, breaks the neckline, and where does it come back to? Entry order block on the quasi. Has the initial move down, comes back for a deeper penetration of that order block, and you can see this move down. This is exactly the kind of movement you can catch by using these order blocks. And it's not enough in this case. It didn't have follow through. Goes on to the second one. And what does price tell us when it gets there, right? Did sellers come in at this area? What do you guys think? Let me know in the chat. Let me know in the chat to see if you think the sellers came in or not. What I mean is, when we reach, from this moment, we reach that order block. This is the order block. Did the sellers come in or not? I'm gonna see it in the chat. So whenever you think, let me know in the chat what your read is on price action, because you have to build that skill of reading what the market is trying to tell you. Right? It's the best way. Price is king. The best way to be profitable in the market, and perhaps, well, not the only thing, not only way, but to me, it's the only way to be profitable. Right? It's reading what price is trying to tell you by the creation and invalidation of yes. Right? Gladys says yes. Sellers did come to the market. I agree with you, Gladys. How do we know that? right? One clue is, without changing direction, is that look at that, bearish structures being created. How do you? There's no way you can create these structures, these order blocks, without sellers taking control. There's no possible way doing that. The phenomenon or interaction in price action that creates engulfing is exactly that. That's the core. It's the sellers being more powerful than the buyers. That's the only way you can have the close on the second bar being below the open of the first bar, which is what an engulfing is. Also outside bars and things like that, right? So the sellers did come in here in any case, and when they retested that order block that was created, they cemented their grip on the market by pushing price much lower. Now, that doesn't mean that necessarily that price is gonna go, falling from the sky from this moment. But if it is, one way to look at to know that is if it's going to break structures or not. So on the H4, this market structure to me is all the way down here. Let me know if you're ready, Ashley. Whenever you are. Oh, you are. Okay, perfect. Then I'll put you on. Let me see this structure. This is quasi. There you go. Ashley, please welcome the man himself, the man of the hour. Oh, let me see.
Can you hear me, Victor?
Yes, we can.
Hi, everyone. You're too kind, Victor. You're too kind indeed.
Ashley, how are you doing today?
Good in yourself, and I hope you're well and the viewers are well and learning a lot. Lots of information today. I had the stream running in the background while I was busy with many other things. So very good content, very good conversation, and interesting conversation. Thank you.
We do everything for the growth of our viewers, the traders there who want they have that desire to become better in their trading. So what are you looking at in your charts? Where's the opportunities according to you?
Ooh, there's always plenty of opportunities. As I mentioned before, I trade all the different 18 what I call the core markets. So right now, looking at all the FX pairs, indices, etc. So I got quite a number of positions open, and if you'd like me, I can go through them. And then obviously, if certain things change, then I'll be looking at the opposite direction. So just the one area that I know, one of the symbols that the 5ers looks at is euro dollar. For euro dollar, I'm currently short, but if certain things develop and change on the chart, then the short will come out, and I'll enter long.
What time frame are you waiting for that signal to change direction?
It's multiple time frames, but basically on the strategy I'm showing for the 5s at the moment is a swing strategy. So that's the core strategy, and the movements, the actual main core anchor time frame is the daily. But I'm also using the 12-8-6-4. The 10 and the 5 minute charts to actually indicate that signal into that daily.
Nice. Yeah, I can see. So you're short, you said, right? But you're
currently on euro dollar. I'm short. I'm short for a day or so. I think even since last Friday, possibly. So they're in profit, and then as things develop, I've managed that trade, so my stop is protecting profit. And then if a trade comes out, either on my stop or my exit criteria, and then generally I'll go in long again as well. So the signal is currently waiting for that long. A number of signals triggered today, reversing position. For example, Aussie dollar was short and then reverse long. Did take some profit out there as well. So it's a number of trades that as the market moves, I go from long to short.
Perfect. So basically, euro dollar and Aussie dollar, US dollar, AUD, USD, right?
That's correct. Those are just two of the I've currently, except for dollar Swiss, I have a position on all the major FX pairs, all the indices on the 5ers. I'm long, and gold hedged, silver long, oil long, Bitcoin long and Ethereum long.
Okay, cool. When you say hedge, is that something that's interesting? We don't typically see or hear traders hedging that much, although they hedging is not something uncommon, but we typically don't hear many people talk about them. So is that something you think traders, there's a value in explaining why and how to hedge, or is there anything we can learn from that?
Yes, there's plenty one can learn from that. As a strategy on its own, it actually doesn't really, the stats and the data doesn't support having that as a strategy on its own. It's actually, in the way I use it, it's part of the system or the strategy I deploy, and there's a period of time when either a long or a short will be in at the same time. So currently that's what happened with golds. So to give you an indication on my strategy, I was short gold, say about a day or two ago, and then I just got the signal earlier today, and then I went long. So the short is still in up until certain levels get breached, and then I'll be in either one position. But to answer your question, plenty of data basically does support that. It's not as easy as just taking a hedge all the time, because basically a hedge, you have a zero-sum game. You're not really in a position. So technically you could say right now in gold, I'm not in a position, but practically I am, until a level gets broken, and then the one trade will come out and I'll be in the direction of that other trade.
So basically, the fact that you're hedging is not something you planned for. It's not part of your plan necessarily. It just happened to be that you have opposing signals in the same instrument, and by doing so, you're going to be hedged because you have both sides of you have a long and a short position.
Correct. It's part of the strategy itself slightly, because there's a gray area in between. So right now we're potentially in that gray area. We're becoming more long now. My short might be coming out as we speak. But in relation to the strategy, there's just that slight area between the transition between long and short that they may overlap. So by purpose, it's not designed by purpose, but by just mechanism, it's designed that way. So it does help to manage the risk, manage the trades, and it's part of the overall strategy itself.
I understand that. We were talking about the chart on gold earlier, and I was saying that this area, at least on the H2, maybe I should put it on the H2, is the test to me. That's how I call it. That's the test for the market to either continue on its, that retrace it has been going on a higher time frame. If you look at the daily, we have been having 3 days of red candles. If we're going to have some continuation to those that retrace, then this is the area on the H2 that would tell us if it's able to close above this in about 1 hour and 53 minutes. Anything can happen. We can end up having a big wick there, and it continues to the downside. But if it is able to close there, at least in my book, in my way of reading price action, it is telling us that it's ready to transition back into bullish. Doesn't mean it's going to go necessarily up from here straight away. It can still go backwards, not backwards, but I mean continue to go lower to get, if you will, like a push in its way up, right? But it tells me that by closing there, breaking that structure, the probability has shifted, and they're telling me it's more likely to continue to go higher, either right away or perhaps in a couple of hours, maybe a day or two later. So I think it's very interesting that it's already seems to wanting to break that structure, but this candle is only 7 minutes old or 8 minutes old, so it's really nothing in the the whole duration, the lifetime of this candle being the H2 time frame. So we have one question here. Vinicius is asking, hedge is trickier. I guess it is. Did you close both positions at the same time as soon when you are profitable, or just avoid the loss or minimize the loss? I think Vinicius is thinking in the same way that I was initially, where the purpose is to hedge. But in your case, you said it is not your goal to be hedging necessarily. It just happened to be part of the plan is that you will be hedging at some point, but that's not where your edge comes. It's not because of hedging. What I do, like, I have the same issue with the hedging, in the same sense that I might be taking a long and a short position, and I might be holding them at the same time, meaning I will be hedging, and one trade, since I'm trading intraday, one trade I might upgrade to be a swing trade. Let's say something like this. Maybe on a lower time frame, let's say we have a downtrend, we broke that neckline and we go lower here, and I get an entry here. Maybe let's say this is the H4 whatever, or H2, and I get a trade going long, right? And probably I'm going to be targeting this, but sometimes I may have a higher time frame telling me that I need to hold this trade for much longer, a much bigger TP, and I'll take my profit on that same day or even the next day. However, I might find here perhaps a short, and it might be at the beginning when I was doing this, it was kind of tricky, because why am I looking for a short if supposedly the fact that I'm holding a long is that I think it's going to go higher? Otherwise I wouldn't be doing so. But to me, it's understanding that you can have both of them being right at the same time. It sounds weird, but perhaps this is not necessarily going to break or invalidate your initial trade. It might only need something similar like this. Obviously the stop will be tighter because it's in the ebb and flow, because this might be just the market in its way going to the target. It doesn't necessarily mean that all my trades go to TP. They don't. My win rate is less than 50%, but that's the idea behind it, that you can have on a different time frame, right? While I'm a swing long, I could intraday be swing. I could be trading short, and it's kind of tricky, and that's a hedge as well. But it's not meant to be a hedge. I mean, it just happens to be a hedge.
Yes, quite correct, Victor. A very interesting point that you mentioned there. One thing to bear in mind in relation to that is hedge is a very general term, but it depends on the details. So, example, a full hedge is where your volumes are obviously identical. So the profits offset the losses, etc. So basically, whatever profit or loss you have on the one trade, once it's opened, the opposing trade, once it's open, then locks in either that profit or loss, assuming that the volumes are identical. If the volumes are slightly out, then you're partially hedged, and then you might be slightly long or short. So in the case of your strategy, in order for that to be effective and successful, you would need to always have the one slightly higher as a volume. And unfortunately, the data I've seen through that process, it doesn't really bode well for hedging as a strategy on its own. But as a byproduct of your entire strategy, it does have its place. So I firmly believe that in trading, everything does have its place within an entire ecosystem, a proper designed trading ecosystem, etc.
You said it well. It's a byproduct. It's a byproduct. It's not the goal. And actually, hedging, it sounds kind of weird or sophisticated, but hedging means basically you have a neutral net position. It's as if you close the position. It's there's nothing special about it. If you had a net account, the account would have been taken out, right? Because what I mean is on MT5, on some brokers you have the hedge account and non-hedging, right? So every position is separate, but you can have also the netting accounts where when you take an opposite position, instead of opening, let's say you're long and you're taking a short position on the same instrument, instead of opening a short as well alongside the long, what it does is it subtract or closes part of the long, because that's going to be your net position. That's why it's called netting. Hedging is basically just that. When you're completely hedged, you have a neutral position or exposure to the market. Nothing fancy about it. There's nothing magical about it.
Correct. I see a comment there. I just want to respond to that comment. Ankit mentioned hedging sounds like you don't want to accept that you are wrong. Just my response there from my experience and expertise. When you're trading, it's not about trading is not about you being right or wrong. In trading, you basically just going along with the market. You're actually asking the market just to ride along. You need to have the humility as a person that trading is not about you. It's not about you as a trader. It's about moving with the market as it moves. And one of the key benefits about hedging is not really on an account to make the account profitable or any real effect on the account. The real beauty about the hedging is more specifically from a psychological point of view, and obviously if you've built it into your strategy, meaning that, for example, now gold, we're in an area that if it either starts to continue its rising trend or reverses into a counter phase, one of the trades going to come out, I'm going to be in the move. I don't have to worry or be anxious or have FOMO that I'm going to miss the move, because the one will come out and I'll be in exactly the other. So there's underlying effects as well that one needs to consider, not necessarily just the trading and the results and you being right. You have to take that into account. It's all about a balance in trading.
Yes. Well said, Ashley. What I like about hedging is that it's a little bit profound, I think. If you think about it, whoever takes a position, we are choosing the time and the direction, right? Because that's you can be both. You're either long, but the position can be either long. It's a dichotomous, right? It's either long or short. You can be a little bit of both. So when you open a position, you decide the direction, and by the moment you click it, that's going to be the time as well. So you expect from that moment on that the market is going to go higher or lower depending on the direction. That's basically what you're saying by opening that position. However, there comes a moment where you don't know what direction it's going to go, but you know it's going to move. And I'm going to show that in a chart. Maybe let's assume you have this this market structure, and you know that there is a big structure here that you don't know if the market is going to go from this moment, right? Once it reaches it, you don't know if it's going to reverse from it, or, right, if it's going to do this, or it's going to break it and go the other way. But what you do know is that it's likely to make that decision, in relation to this structure or this area. So what you could do, and this is what Ashley has been just explaining, assuming you had a position long, right, that goes all the way up and maybe even targeting even higher, but it gets to that position where it's a decision moment or an area, and the market, what a hedge does, you take the opposite, right? That's the hedge. Basically, you take the opposite. And what you do is, right, let's say, what you can put is once it reaches this level, let me see, I've never thought about how to explain it, but whenever it reaches this level, right, whenever it reaches this important structure, what you do is then you hedge the position in here, right, while it's in, that's not the right tool. You hedge it as it is in this structure, and you put the stops of each one as it is, the short above the area and the long, you're already in the position, but you put the stop closer by. And so whatever it does, automatically it will close one side and continue with the short if it is going to go down. And if it continues up, it will close the short and continue with your long. And so what you're actually doing is you whichever way it is going to go, you're on board, and you're not bound to a specific time anymore, because that's what you have when you open a position. You're deciding the time, right? From this moment on, it needs to go up. But when you have the edge on, when you are completely hedged, it doesn't matter if it happens today, tomorrow, whenever it happens, it's gonna trigger you in, just like a stop order would trigger you into the position going one side or the other. Basically, it's the same thing as a stop order, because you're going from a net position to either a long or a short, which you would with a stop position. But this is the other way of using hedges as well, right? This is on purpose. This is not as a byproduct, but this is part of your this could be part of your strategy. But very nice. I like that. I think it's important to it could be a tool as well, right?
Yes,
could be a tool
correct.
in your toolbox.
And just thank you very much, Victor. There, you explained very nicely there. Hopefully, all the audience got it. And basically, you have a buy and a sell, a long and a short at the same time. And when the one trade comes out, either by you closing the trade, one of the trades, depending on your strategy or analysis, or hitting the one trade, hitting the stop, then the other trade is in, and then you in the direction. Just to give you further insight to my specific strategy, I was short on gold from Friday. So from Friday, my strategy entry criteria for a short triggered. I came out of my long on gold on Friday that I was in for about 4 or 5 days, and then it went short. And then I've held that short up until now. And then today, with the movements, the strategy signals to go long. Triggered me long. So that's the byproduct. I didn't specifically enter a long and a short at the same time. And then I'm waiting for the one to either come out on a stop loss or my exit criteria. And then from there, the one trade will be in that direction. However, in terms of the analysis, it does appear that we're moving back into a progress phase in that rising trend. And we could probably challenge those all-time highs.
Perfect. We have, I think we hit a topic that a lot of traders have a question about, because we have many questions about hedging. Is it allowed in the 5ers rules to hedge like this? The way I showed where you hedge your position? Yes, it is. It is allowed at the 5ers to hedge. There's nothing wrong with that. As long as it is within the account, right? One account where you're hedging within one account, opposing instruments or positions is perfectly fine. There's no problem with it. Hedging using different account is not okay. Just so you know, it goes against all the terms and conditions of playing things fairly.
Yes,
so go ahead.
Sorry, thanks, Victor. If I can just further add to that, right now, when I'm talking about the positions, what I did when I joined the streams a couple of weeks back, I enrolled onto a 100K bootcamp. So the trades I'm speaking about is actually on the evaluation account, and I've done it on purpose to take the audience through that journey, and we can look at the results, etc. And something I want to do on an ongoing basis, looking at the reports, getting them to understand the data that was reflected there.
Nice.
But that can be later or another time, it's not a problem. But by default, the 5ers, MT5, the way they've set up their liquidity providers, the physical structure setup of MT5, it's a hedge account, not a netting account. So the answer to that question is yes. But obviously, Hyde can just please look at the T's and C's of the respective funded programs to make sure that you're within the 5ers regulations.
Yes, it's the responsibility of every user, client, trader to know the rules in advance, right? The rules are there. You ought to be knowing them, and it's your duty, your due diligence as a trader to know, what are the boundaries of the environment you're currently trading within. And in this case, it's the prop firm, the 5ers. So I was gonna ask you something else, Ashley. Do you have Victor. The account? Can we see? Did you started already trading the account?
Yeah, it's been trading for now 3 weeks or plus minus.
what can we is there something we can share with the audience?
So what I'll do is, because we started with the charts, what I was planning to do, depending on your lead, was to go through the 5ers report as well as the MT5 report, and there's obviously a similarity in terms of the data, and then show the particular trades, but we can reverse it. It's not a problem. And the reason for my suggestion was just to structure slightly differently for the audience, to say, even though we're trading and the 5ers looks at charts most of the time, which is great, but as a trader, to be responsible, it's always good to understand that reporting side. What is the stats telling me? Irrespective if it's a win, lose, profit, drawdown, it doesn't matter. What is the stats telling me? So we can do that as well. But what I'll do is I'll share with the audience the different trades I'm in at the moment.
But it's up to you. I think if you wanted to start with the stats, I love it. Let's do it.
Okay, so we'll start with the stats then. Let's start with the stats. Okay, I'm gonna
good stuff. I like this, Ashley. That you're focusing on the data, on your performance, on not necessarily on the thrill of the tick going up and down. Is it gonna hit my TP or not? You're going to the data, and I think that's a very crucial aspect of trading as well.
That's correct. Okay, when you ready there, Victor, I think I am sharing.
Yes. All right. Am I okay? Can I share this? Can I put it up?
Of course you can.
Okay.
Yes, you can. Okay, so a couple of things just to start with as an introduction. Most often people look at this and go, wow, not so great. Drawdown. Yes, I am in a drawdown, but actually something from my opinion and my experience and expertise in trading, being in a drawdown is quite natural. It's actually quite normal. There's nothing wrong being in a drawdown. And we know that with Jonatan, he's got his little clown suit, he's a drawdown. But I would say if you've gone against your trading strategy criteria, that's when you should be putting the clown suit on, not necessarily when you're in a drawdown, because a drawdown is something natural. As long as you're within the parameters of your risk management, the program parameters, then you're actually fine. There's not a problem at all, as long as you don't use that as a crutch now to go against your strategy rules. So that's when there's a problem. Okay, so just something again. Obviously, that's the account right now. Okay, we can see what's happened. What the balance is at 24,488. So basically, I'm 2% in a drawdown. However, my equity is at 24713. So we'll see that in the live trades in a moment. First thing I'd like to draw attention on is obviously this advanced stats. So far, there's been 144 trades taken place. 43 have been profitable, 101 have been losses, 80 long trades, 64 short trades, the gross profit of about 1,000, gross loss of about 1.5, total net profit down 510, which equates to the drawdown. Profit factor right now it's -1 because obviously the losses exceed the profits, and then the win rate is on the low side of about 29.98, but it's not too low relative to the strategy itself. Also to bear in mind, even 3 weeks of trading, I've done 144 trades, it's still very early days. So the one thing that I like about understanding the stats is not just looking at the stats once you've passed a evaluation or you've passed a phase. Looking at your stats on an ongoing basis is critical, because there's plenty of good insight that one can draw from those stats, which I'll share with the audience now. So on this account, I'm trading 18 symbols. Each symbol is risking 0.2%. So basically 0.2% of the evaluation account of 25,000 basically gets you to about $50. Okay. So one example here is when you see my biggest loss, okay, my biggest loss is actually higher than the percentage I aimed to lose. Now, that's like a red flag already to say, if you see your stats and you go, ooh, my biggest loss is greater than basically what I'm supposed to risk. What happened there? It's like a red flag for you to investigate. Something may have happened where you're not aware of it, or maybe you are, and it's something you need to tighten in your strategy. Now, in my case here, to share with the with the audience. I just got to move this away so I can scroll down. That 177 actually came for one of my trades on oil, where I held it overnight on the weekend. And if anyone's gone through to the symbol details in MT5 with the different brokers, you'll see that the swap on a Friday is 10 times higher because of the weekend. So basically that swap was $72.50. Okay, so that was the bulk. If you take 72.50 away from 122, then you'll get to my max of losing the $50. So it's something to go, hang on, to be aware of those areas. Then you can investigate. Okay, that's just an example. Then if we carry on, if I move back up to the stats, we can see my average profit is 24.72. Average loss is 15.57. Now there's something, some insight there into that average loss. I'm risking 0.2% per position that I take. I'm trading 18 symbols, and that works out to $50. Now remember, as a trader, your key role or key responsibility is to manage risk. What does managing risk mean? It means not necessarily not losing, or it doesn't mean eliminating loss. It's impossible to ever eliminate loss. Managing risk means making those losses as small as possible. So on average, I've lost less than the designed or the maximum loss I've assigned, 0.2. And I've got up to 8 different areas to exit a trade, from a trade perspective, from an account perspective, from a management of stop, from different TPs. There's a whole bunch of different ways I can manage the trade. But on average, I'm losing a fraction, less than half of my design loss. What does that allow me to do? That allows me to continue to keep trading. There's always opportunity in the market. The key thing is to manage that risk. I know I can keep on trading. Got 144 trades. Yes, I've drawn down, but I've got the world at my feet to trade, recover, and hit those targets. So it's a journey as a trade while a trader goes on. If you also then take the average of 24.72 divided by 15.57, you would see my achieved reward risk ratio is about 1.7. My aimed reward risk ratio is in the region of 3 to 1. How can we see that we can achieve that? Because my best profit is 154, which is basically a 3 to 1 reward risk ratio. So you can see some trades are hitting the TPs, others are getting managed, still taking profits, but I'm still achieving a positive reward risk ratio, less than my aimed reward risk ratio. But again, this account is still trading. It's still live, it's still trading. But it's some things that one can understand and assess as you trade. And then we can see the average trade duration, 7 hours, 19 minutes, and 35 seconds. Okay, so that's average of how long I'll hold a swing trade. Okay, let me pause for a second. Victor, do you want to jump in at any time? Something you want to look at or scrutinize or chat about?
Let's see. We have your 144 trades, and how long did it take you to take these trades?
Oh, this is about beginning March, so it's less than 3 weeks.
Okay, so basically you trade about almost 50 a week, 40 something trades a week on average. And
yeah, plus minus. I mean, already right. You could say about that. I trade in the 18 symbols. I'm currently in 17 open positions. So you could equate a trade would enter, let's say, once per week. So basically at least 17, minimum 17, because there could be a turnover of phase between long and short as the days develop in a week. So on average, yeah.
I see. Let's see. What else do you have on the stats? It looks very good. I like it, how you're going. Did you have a higher risk settings earlier, or has it been the same 0.2% risk all along?
All along, from the start up until current and going forward, it will be 0.2. And the reason is because I could be in all 18 symbols at once, basically like I am now. And basically, if you take 0.2 times that by 18, you get about 3.6. So remember, the boot camp have a max drawdown limit of 5%. So if all the trades hit their stops, for example, I'll still be within the parameters of the program. Yes, I'll have less margin to play with as risk, but I'll still be in the program. However, reality is that there's a very small percentage at a time when my trades are open that I'm always risking 3.6. It's generally at least 1%. If you take where the stops are of all the open trades and you calculate their loss, it doesn't come to 3.6 because of the different areas I've got to manage it.
I see. Perfect. Another thing is, are you taking positions? Are you splitting positions up lately? Have you been splitting positions?
Yes, very nice. Good question there. So as the evaluation and the programs develop, I'm going to make it real, whereby as I adjust what I call optimized settings. So the core strategy is still a swing strategy, but as you develop, there's slight optimization differences or tweaks you want to make along the way and adjustments. The one adjustment is I split my position into 3 trade orders. That's what I split, and that they've got each trade order in that position's got a different purpose.
Yes, I can see in the equity curve that you split it up because it smooths out the equity curve, meaning that each trade is making a smaller step either way, up or down, and we can see it on the equity curve that the latter half is smoother than the first half, and that has to do with that's why I ask about the risk, because it's going to be either the risk changed or the size of each individual position has changed there. But very, very nice. I like that, Ashley. Very good. I think everyone in the audience gets a good view of what goes inside behind the scene when traders like yourself are trading. How does it look when a beginner trader looks at this, says it doesn't make sense. Why am I losing? I'm losing. This system does not work. I need to change system. While you're looking at your data and saying, no, this is just normal. This is the normal ebb and flow of my system. It's supposed to do this. Losses are part of the game. Drawdown are natural part of the evolution of in time of any strategy, and this one as well. And this is within norms because I have data. I know what I'm doing. That's the difference between an experienced trader and someone who still has a lot more to learn.
Correct. And I wanted to do this exercise to take it from a starting point on the 5ers program and take the audience along with this journey. So this journey hasn't ended, and I intend to add more different programs with the different layered strategies that I have as we develop. So I thought I'd start with this one and then take the audience through. So every time we'll be looking at the stats before the charts, before the trades. And the key thing about your stats and your reporting, it's about accountability to you, because there's areas that you can pick up if you scrutinize those figures like I did to go, hang on, what am I doing wrong? It's maybe not the system, and obviously there comes the back testing, forward testing, etc. But what am I doing wrong? So it's accountability for yourself. And it would be, I'm not nervous at all with the drawdown. The one area, if I would do anything wrong, is now become nervous and start panicking and risking more and changing everything and doing things I know that is incorrect. That would be quite incorrect. And worst case scenario, if you go out of a program, this program bombs out, it's part of trading. It's really part of that journey that one needs to endeavor to move along with. So it's all part and parcel. So something to break that stigma about losing is that drawdowns are natural. It really takes you and matures you as a trader.
Awesome. This is good example. I think thank you, Ashley, for giving us our traders this good example of how to look at a equity curve while it's going into drawdown. Actually, it's a blessing that your strategy went into drawdown, because we can have this discussion. We can talk about it. It's not about winning constantly. That's not how trading goes. It's losing is part of the job all the time.
Correct, 100%. Thank you, Victor. What I'm showing now is just an overview of the 18 symbols that I trade, and we can see in this area, let's see if I can use, maybe the arrow is fine. With the blue, all these blue areas here, those are the FX pairs: Euro dollar, cable dollar, Aussie dollar, Kiwi dollar, dollar yen, dollar CAD, dollar Swiss. We've got gold, silver, and oil, and then the 6 indices, and then Bitcoin and Ethereum. So you can see that I've got positions, and you can see right now on my equity, about 1% or just below 1% up. So recovering from that drawdown. Where it closes doesn't matter. I've got the different areas to close, manage the trade, get into new trades, and keep on that journey until I reached the target.
And this is fully automated, the management of the trades, or is how much is you pulling the trades?
It's 90% automated. It's a built in-house, built-in, my self built-in in terms of the EA. So it's not a purchased EA. It's something I've developed, or a group of us traders have developed. So that's what it is. But it's 90% automated. It's running, my EA is running on a VPS, and I've got different areas to manage the account, to manage the trades as well. And I've got multiple strategies, multiple accounts running. We've got about six to 7 VPSs running.
Sounds awesome. Hit the like button, guys. This is real stuff. This is real traders, because that's what we are at the trades. We are traders. This is for traders, by traders. This is the real stuff, right? Actual traders showing you what they do in the market and how they do it. So hit the like button, subscribe to our channel. Another question, Ashley.
Yes.
I think I don't remember the answer, but I think I asked this question before. How's the risk allocation between asset classes? Do you have are you looking at this? Are you distributing the risk? You have 3 by 8, so 24 I see here. Is that correct?
18.
3 by
3 by
18,
6.
3 by 6. So do you distribute all of the risk equally between the 18 instruments, or do you have like a limit per asset class where you say Bitcoin and Ethereum, even I can only limit, and that whole as a group I can only risk this much, but let's say on Forex I can risk more if I have more signals, right? I have a different level of limit in terms of exposure and risk allocation. Do you do that?
For this 5ers account, because of the drawdown margin, or the limit, the stop limit for the program is fairly narrow in terms of 5%. 5% is still reasonable, but obviously if you're running your own account, you can dictate that whatever percentage you'd like. So because it's 5%, the answer to this account is that they're all equal. They're all risking 0.2%, and I split that 0.2% to 0.1% for trade order 1, 0.05% for trade order 2. My apologies, 0.08% for trade order 1, 0.04% for trade order 2, and another 0.08% for trade order 3. So that's how I split it, and each symbol is risking 0.2% every time it opens a position. So a total of 18 would be 3.6. However, if I'm running, for example, different accounts for different purposes, or personal account, then I would be able to alter or adjust the risk per asset class depending on whatever criteria. But because it's quite narrow, then I've kept it all at 0.2, because I still got a 1.4% margin if all the trades had to hit their stops at any point in time.
which is highly, highly, highly unlikely.
Correct. Highly unlikely with everything they've got running, but we've got to always cater for the worst case scenario and work up from there.
Perfect. Awesome. You mentioned first, second, and third order. Are these the split? You split every idea into 3 orders, and that's what you mean by 0.08, 0.04, and I think 0.02.
No, yeah, 0.08 again for a total of 0.2.
Okay.
So that's correct. So there's some interesting areas about that. So to share that insight, of the 3 trade orders, 2 of the trade orders enter at the same time. So 2 of them enter exactly when the signal hits. So they enter and they're in the market. It's a execution, straight execution, direct market execution. So they enter. The reason for 2 at the same time is I've got 2 different TP levels for that trade. The third trade order is a pending limit. Now, the idea around that is quite interesting and quite something quite, if you want to get your head around it, quite exciting and interesting to start thinking about in your own strategies. And the reason I say that is because when we enter a trade, what does all of us want? We all want that trade to just move in our favor, hit TP, make us some money. That's great. We all want it. Even I want it. What's the reality of trading, though? Is that the reality of trading is that, yes, you may get 1 or 2 or a couple of trades that just exactly do that, which is great. It's a good endorphin and you're on a high. But in reality, as you're trading, you're going to have trades that go naturally against you as you enter. Now, yes, the trick is that can we turn something we don't like in our favor? And the answer is yes. And what does that mean? That means I've got, as soon as I enter a trade, I place a pending limit lower down with the saved stop loss level. What happens there is that now my stop loss distance is reduced. It's reduced. And let's say the trade goes against me, triggers me in. I then can achieve a higher reward risk ratio at a much lower physical level of TP. So just to give you some insight on euro dollar, for example, there's 2 cells and there's a sell limit. There's 3 TP levels. This first TP level is actually that sell limit there. So this first TP level, if the price comes down, it won't trigger because I'm not in the trade yet. But let's say euro dollar had to go against me, going up in a short, and it hits that sell limit. I'm triggered into that short, and let's say suppose it comes back in my favor and moves in my favor again and gets to this first level. That TP it takes is a 4-to-1 reward risk ratio. This is a 2-to-1 reward risk ratio, and that is a 3-to-1 reward risk ratio. So it's understanding and taking certain things we don't like in trading and asking ourselves, think outside the box. Can we make something we dislike in our favor? And there are ways you can. Not everything, but there are ways. But it's understanding that going through that journey process.
Basically, you're optimizing your entry by not making it just one entry. You're splitting it up onto multiple entries. You're averaging into your positions, capturing better prices if they were to occur, because you've observed that once you enter, price doesn't really go in your direction necessarily automatically right away. It goes against you a little bit, giving you a better price. And I suppose you've seen that, and you've measured how much on average goes against you, and that's where more or less you're going to put your next position to get in, to get a better price, a better average price than you had on the initial entry alone. Is that correct?
That's 100% correct. That's it by principle. There's different ways you can alter it to achieve other objectives, but yes, in a nutshell, that is, I scale in and I scale out. And the key reason for that is if we think about this from a logical, practical perspective, let's say we take just a standard novice responsible trader, enters a trade, puts a fixed stop loss, fixed take profit, that's great. So they don't touch the TP, they don't touch the stop loss, and they don't intervene. That trade can either come out on full stop or full loss, which is great. Whichever one, the kind of that set in and forget it, like sometimes you guys mention, not an issue at all. However, if we think carefully, between the stop loss and the take profit, there's a huge range in between that price moves. You might have a partial loss, you might have a partial profit. Those are uncaptured areas where you can do your job to manage risk and maximize profit. So instead of having just two fixed areas, understand the different movement in between, and you won't be able to cater for every single point. It's impossible, and it doesn't make practical and mathematical sense. But you are able to close the gap a bit by having a few more areas. For example, I also have a trailing stop. So the stop trails, reduces the risk, locks in profit, etc. And that's another way I can exit. I can exit on different TPs. I can exit on a exit criteria of the strategy. I can exit as a group of trades, or I can exit as the whole account. So it's all about managing the account. Most often I see traders focusing too much on a single trade. Remember, you do take trades in an account, but the overall objective is to move the account. So you're taking trades on the account. Don't forget to manage the account as well.
We have one interesting question. Every so often we have this question coming up all the time. Ali is asking, that's not actually the question. The question was this one. What are your thoughts on stop loss to break even when you're putting your stop loss to break even when the trade goes in your favor, of course, or even put it a little bit in positive once it hits a certain positive or profit level? What are your thoughts on that, Ashley?
My thoughts on that, by default, as a principle, it's a good thing. Okay, how you apply it, there's many ways to skin a cat. So there's many ways to do it. But let's start with the principle. The reason I say it's a very good idea as a principle is because, remember, your job as a trader is to manage risk. Coming again, what I said earlier, managing risk doesn't mean not losing. It's impossible to not lose. Managing risk means reducing your losses. So if the trade goes in your favor, it's providing an opportunity to reduce your risk. You should be doing your job. How you do it, though, how you execute that is really depend on your strategy. So you could move it, once the trade moves slightly in your favor, you could move it all the way to break even or protect some profit. But again, it's about balance. If you do that too aggressively, you're not going to give enough room for the trade to move. So, for example, to illustrate the strategy I'm showing here, I use the daily 14-period daily ATR as my stop loss distance. And when I trail it by 1.2 times that distance. So when the trade initially goes in my favor, the stop won't move until I'm basically 20% of the stop loss distance in profit. Then it'll start moving it by that exact same distance, and it keeps that distance and it slowly creeps up. So you got to think about balance. The principle is correct, but you need to now apply it to your specific strategy or style of trading and understand what is the right balance to manage risk, but at the same time allow enough room for the trade to move. So that's the key thing. And then a last thought on this is a principled no-no as a trader is to never, ever, ever move your stops greater. Always keep your stops where it is or move it in your favor. Never, ever move it out of your favor. The moment you do that, you are losing the underlying anchor that separates you from trading professionally and maturely to gambling. So just something on that point as well.
Awesome. Well said. And that's what we are here. We are here to show you great examples, great advice to keep you safe from, the harm's way, so to speak. Great stuff, Ashley.
Thank you, Victor.
Before, is there anything you want to explain about the charts before we continue? Because I have someone who wants to explain something, has a little announcement to make, and I would like to use it as the transition to the next.
Go for it, Victor. I'm all okay. Yeah, go for it. I'll follow your lead.
Perfect. We'll be for a couple of seconds. Let's hear what Alex has to tell us.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
Perfect. All right. So we let's see. We watched the charts and how you explain a little bit how you enter your positions. You split them up in three because of you're trying to optimizing your entry and your exits using the ebb and flow, the natural ebb and flow of price. And of course, you're using data to do that. You're not just putting it randomly at a better price. You're using actually something to quantify how far they need to be from your entry. And you've shown us how the stats are looking of your trade 3 weeks into your trading, and you're confidently calm about it, even though it is in drawdown, which is awesome to see because your system, what is normal for your system, and the ebb and flow of your equity curve, what is normal, and as long as it's doing its thing within the range of normality to you, there's nothing to worry about.
Correct. And even if, for example, the program gets terminated and I reach the stop loss, it's really not at the end of the world. And that's the beauty about the programs. It's opened up, besides the funding and the potential profit, etc. It's opened such a different realm compared to when the programs didn't really exist too much. And it's opened up whereby for a very, very low risk entry, you can have an opportunity on a demo with the prospect of actually having real funds at the same time. And the reason I like that so much is because as a role, remember your role as a trader is to manage risk, not in trading, but you yourself and your accounts. You don't have to now go at a loan or a novice trader and blow a couple of $1,000 $49, $100, and then you can take a strategy and the platform is there for you to actually understand what is happening. So it's really brilliant, and I think that's the great thing with the 5ers and the funded programs that's developed in the last couple of years. I know I didn't have that when I started.
Yes, indeed. When I started, there weren't prop firms as well. All the way before I started trading full time, I meant. And prop firm, the opportunities that is now given to a trader are beyond belief, because you don't have to have capital. You only have to build your skill. And that is something within your reach. It's not rocket science. If you dedicate to it, you can learn how to trade successfully, profitably. That's the only thing you need to do. And because the prop firms, it is within reach. I mean, anyone can, even in the other parts of the world where, the wages may not be as high, the smaller accounts are well within reach, I think everyone almost. So in other words, being a profitable trader is within everyone's reach, basically. If you only have the discipline and the decision, the determination to actually apply yourself to it and learn what it is that a good trader needs to do, to be successful. It is within, before, more than 10 years ago when there weren't any prop firms, even if you had the skills, no capital, sorry, you're not gonna make it.
Correct.
Right? And correct. Now we have the capital side of things solved. The only thing is left is you as a trader. How do you become better? And that's why we have streams like this, Discord community, ABL, as you just saw that little clip from Alex. It's all about growth, how you can become better. So, Ashley, we're getting to the end of our stream. I would like to thank you the same way we do every time you come around, because you are a gem. I think you are very important for the audience to see, how it is a trader. How is it, you're not at all under stress because you're, how to handle that drawdown. I think this is what the audience needs to see. It's not flashy Lambo on Instagram. That's not reality. It's about working. It's about your data. It's about reflecting about how you are you doing, what can you optimize, what is it that is not working, what is all those processes. It's a big thing. It's a long process, long journey, but there is a way, right? And so on that note, I'd like to thank you, as I said, Ashley, and I'd like to welcome everyone in the audience to visit our Discord community. If you haven't done so, check out the ABL community as well, and invite everyone for tomorrow's YouTube stream as well. Remember, we're streaming from Monday to Thursday now, 4 days a week, all for your benefit. Any last comments, Ashley?
Just to thank you, Victor, and what the team does, Jonathan, Alex, everyone there. I think you guys are doing a great job and sharing with the community. And the nice thing, the markets don't discriminate. It's there for everyone. So it's brilliant. The sharing platform community is excellent. Thank you, Victor.
All right, Ashley, I love that message. On that note, see you guys next time. Bye-bye.
Bye-bye, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.